Hi friends, how are you doing? Good to see you. Welcome back for your morning show. We're going to be looking at AMC, GME, stock, technical analysis, and of course we'll be looking at commodities, forex, cryptocurrency, and anything that you would like to take a look at. My name's Rocky Outcrop. This is your morning show. It's good to see you. And I say morning to all of the folks out there in the United States. Of course, if you're in the UK or Europe, it's good afternoon. Good to see you. But of course, if you're over there stateside, happy morning, 8 a.m. Welcome to the world. Oh, stretch. Oh, yes. Good morning. Nice. Feeling good. Yes, good day ahead coming up for all of us. And I thought I would open up today's show by reading a little bit of something. Just reading a little bit of something. People looking at the screen now probably already, a lot of you probably already have an idea what it is that I'm going to be talking about just here. But I thought it was a nice little story. It was shared with me by one of the members of the community on Instagram a while ago. Went looking for the picture earlier on today just to look at it, but it just doesn't show up on the messages thing. So anyway, before we take a read at that, just real quick, I'm going to show everybody visually that we look at charts on the show. That's, of course, what we do. That is, of course, what we do. It's really good to see you. And we'll be talking news and all sorts of stuff soon enough. Where's my news tab gone? I guess I've moved it onto a different thingy, so I can bring those news articles over, I suppose, at the time. I've got things like, just as suggested by Apple Blossom, just to look at, the list of sort of announcements, press releases from the SEC, just to have a wee laugh for a second, in fact, just to look at them, because it's crazy. To talk about the UK's government launching a plan for the world-leading hydrogen economy. We can chat about that. There's a stock out there that Vanguard found to be the most potent inflation-fighting asset class, apparently. Sorry, not a stock, it's an asset class. So that's something that we can maybe take a look at if it doesn't link through to some paywall article. And you're going to lose up to 30% on these 10 stocks, says some analyst somewhere. So that's something else that we'll take a look at as well. Woof. 30% on these 10 stocks, that's big moves. So maybe there's some interesting stuff to be our top of the day, top of the morning. And there's a book that a chap called Paulo Coelho wrote some time ago now. I sat down and wept. By the river, Piedra sat down and wept. Is that what it is? Piedra? I sat down and wept. Down the river Piedra, I sat down and wept. That's the name of the river. Got it. Confused for a second there. I'm going to have to zoom in with the old manual, old-fashioned method to read this one. You have to take risks, he said. We will only understand the miracle of life fully when we allow the unexpected to happen. Okay, so it's quite a nice little story, this one, and I think in lots of ways it can remind us about the sort of the journey of holding these stocks, looking for the MOAS to happen with all the ups and downs that come along with it. Now, of course, this chap here refers to God. I'm not religious myself. I'm definitely not proselytizing as I read this out. It's just a nice story. Every day, God gives us the sun and also our moment in which we have the ability to change everything that makes us unhappy. Every day, we try to pretend that we haven't perceived that moment, that it doesn't exist, that today is the same as yesterday and will be the same as tomorrow. But if people really pay attention to their everyday lives, they will discover that magic moment. It may arrive in the instant when we are doing something mundane, like putting our front door key in the lock. It may lie hidden in the quiet that follows the lunch hour, or in the 1,001 things that all seem the same to us. But the moment exists, a moment when all the power of the stars becomes a part of us and enables us to perform miracles. Joy is sometimes a blessing, but is often a conquest. Our magic moment helps us to change and sends us off in search of our dreams. Yes, we are going to suffer, we will have difficult times, and we will experience many disappointments. But all of this is transitory. It leaves no permanent mark, and one day we will look back with pride and faith at the journey we have taken. Pitiful is the person who is afraid of taking risks. Perhaps this person will never be disappointed or disillusioned. Perhaps she won't suffer the way people do when they have a dream to follow. But when that person looks back, and at some point everyone looks back, she will hear her heart saying, "What have you done with the miracles that God planted in your days? What have you done with the talents God bestowed upon you, sorry. You buried yourself in a cave because you were fearful of losing your talents. So this is your heritage, the certainty that you wanted for your life." Wait a minute. Anyway, it's just kind of saying there that, every day you've got a moment that you can do some good in. That's what we're trying to do here today. And of course, it can be the thing that changes your life forever. So you should always take these opportunities when they present themselves. And that's also, there's going to be, it's a dream that you have to follow. And that's what we're all doing, following a dream over here with these, with holding onto these stocks. And yeah, it's a choice and all that sort of good stuff, right? Okay, good, cool. There's actually a second page there, and it goes on and it's better. I wish I had had the bigger copy so I didn't have to zoom in with the old eyeballs. But it's just a positive message to send out. Right, so good morning, America. Good afternoon, Europe. Let's take a look at a couple of the charts just to see where we ended up yesterday and bring everybody up to speed. Of course, GME pre-market trading right now at $163.25. It finished up the day yesterday at $163.49. So we're above that 160 line that we've been talking about. Obviously, we're below the 100 and... Wait a minute, what's going on here? GameStop, yep. Why is this Fibonacci all in the different... What chart is this? This is confusing. Just going to ditch that. So there's stuff going on here in this chart that I don't really recognize right now. I wonder what that's all about. Maybe I've just gone mad. Anyhow, yeah, cool. Ditch everything, in fact. Right. And it's the pre-market trading at 163.25 right now. 163.49 was the close of yesterday, below that 165 price point that we wanted to see the prices getting up to. But of course, above that 160 kind of pivot point, which is pretty good. Now, we're also looking and keeping our eye out for this RSI swing failure idea. It's not on the 24-hour time frame. It's not on the 1-hour time frame that we're looking at it on. It was the 4-hour time frame, and we can see that we haven't actually got that swing failure that's come in yet for us. So we're still looking for that, but anticipating that if we did see it happening, we'd see it happening below the pivot point in the market. So we're still in terms of the price action itself, the market structure. So we're looking between these two lines, the 50 simple moving average here on the 4-hour time frame and the 200 simple moving average on the 4-hour time frame, with the range really between those two existing between 166 and 188. Jumping over to AMC to take a look at that, what we can see is pre-markets trading 37.85. It is actually closed out there yesterday at 37.12. I drew a big heart on the chart the other day talking about 37 buckaroonies. This is the 4-hour time frame. Zooming on in here, hiding off the drawings just real quick so we can see with a comparison that we actually did close out yesterday higher than that price point over there. Now, at the same time, this opens up an opportunity for retracements where we put in a higher low. Yet again, we have a low, a high, a higher low, and a higher high so far. So we're actually, what we want to see naturally is for continuation on at this point, and that would be nice. We're also, if we do see any sorts of pullbacks, etc., not coming in here with any bearish divergence. So everything's pretty healthy on that front. In terms of the RSI, be looking to see if we can find a bounce at the neutral line. Of course, looking back to market structure on the 20th of July here in terms of the RSI, that will have been where, or was that right? Yeah, the 20th of July, 2021. That's where the last high on the RSI came in at. So things starting to feel a little bit better trend-wise here for us. So it's good to be able to think about the potential for a trend on this one, regardless really almost of the price action for the day. But what we are, of course, looking for is continuation of that positivity. So in other news as well, we have got Bitcoin, which did indeed do exactly what we were talking about yesterday in terms of dropping back down a wee bit. Now, it dropped back down a bit further, 44,500 rather than 45,500, whatever. It was, when I actually said 45,500, 500 yesterday. It's kind of half operating off of memory. It shouldn't really do that sort of thing, but we've talked about these figures so much recently that to me it really doesn't seem to actually make that big a difference as I sniff on my too fresh banana. It's not, it's too green, this thing. You can see here it kind of appears and fades away with the green screen type thing. It's a bit of it's too green, this banana. Anyhow, we're in here at 44,200, 44,400, or 40, well, actually 44,700. Gosh, get it right, Rocky. And what we're seeing here is that we have a higher low in a sense, 4-hour time frame, done, you know, quite well. And while we have that higher low, looking at the RSI, you can see we've got these lows going lower. So that's the last low. That was the 12th of August. Comparing it over here, yep, indeed, that was the last low. So just looking between these 2 points here, ding dong, what have we got? Well, that's, of course, hidden bullish divergence. Can we see it anywhere else? We can't see it on the MACD, but here on the accumulation distribution indicator, we can indeed see that hidden bullish divergence. Nom nom nom. No, good time to eat a banana. Good time to eat a banana when you spot some hidden bullish divergence on the chart. Let's go take a look at our friend Linky Schminky Pinky. And this is, of course, Chainlink. Chainlink being one of those Oracle coins. Oracle? What are you saying Oracle for? That's a stupid word. Yeah, I know, I agree. That's right, yeah. Because Oracle's kind of predicted things into the future. Well, yeah, that's what we kind of interpret them as, but it's more about like speaking the truth. You know, that's what the Oracle's about, speaking the truth. And Chainlink tries to do that in terms of reporting verified independent kind of price data, for example, right? So you can link up your chain with other chains and get on the blockchain data provided to you about pricing, which is very, very important in decentralized finance, for example, because you can imagine if you had a contract where you'd said you'd gone long on something and that if the prices were to drop down below $80, that your contract would need to be liquidated, wound up, and the margin then provided back to the lenders, and of course leaving you with nothing, but in a way that of course would protect the infrastructure of the market. So if that were to happen, you would want to know that that was a verified price that had come from a good source. So would the people operating the people that are coding and operating the decentralized exchange, and so would your counterparty, in fact, because you know they're not in this to sort of take things off you like that. So that's how you'd work in a trustless environment. Trustless meaning that he doesn't need trust, not that it's untrustworthy. In fact, trustless exists as a phrase because it's so trustworthy it doesn't need trust, and it's with things like this that is actually possible. Okay, so that's what this is about, by the way. Anyway, Chainlink pushing down past its previous low here. This is a little kind of inflection point. It makes you wonder if that really was the previous low. So what we're going to do here is make a quick comparison between the 4-hour and the 24-hour time frame, because it'd be nice to see this coming in as hidden bullish divergence, would it not? As we push down past the 50 simple moving average there. Now prices are kicking about $25. Is obviously a fairly significant pullback from the highs up at 30. Unfortunately, when I told everybody quite explicitly to sell it at 30, that was during my fake sort of wasn't actually broadcasting, even Streamlabs was telling me I was broadcasting live stream doodah. Anyway, the percentage decline that we've seen as a result since then has been 17%, and we're looking around at these areas about 25, 27. These are the two kind of pivot points, and just bringing this up towards the 24-hour time frame to put that into context, you can see that this is indeed a higher low currently, and that is indeed over there as well. Just a bit of isn't a very well established area. The prices didn't base in there or consolidate for any period of time, so we wouldn't expect to see that necessarily tie together as being a good support. But if I bring more data onto the price chart, right, and look back the way and then add on the VPVR, so the visible profile, the visible range, volume profile visible range, and then look to where the biggest node would be on the screen at this time, the biggest area coming in here. Well, it does actually happen to be at this in this juncture right over here. So looking over to the left and seeing where that support comes in at, zooming back out the way and saying, well, you know, actually we've made it up to a significant juncture in the price action here, having come in and gone up to the 618, tested the 200 very, very thoroughly, looking in here and seeing how perfect the TA is. It's not me. I don't take out the crayons and draw the candles on the charts myself. yourself. It's not me that makes it so that the bodies on this chain link come up here to the 200 simple daily moving average on the 24-hour time frame and close at it 3 times in a row, and then consistently talk about this type of content with you in order to make it so that you yourself can take advantage of these moves. It's not me drawing it in after the fact and making it look like it. We talk about these things all the time in advance. Therefore, seeing the prices here at this area having bounced off of it, coming in to put in a higher low potentially in this area, provides you with that edge on the market when you compare it with the VPVR, and you look down here and you see that yes, indeed, there is that hidden bullish divergence on the RSI. It's not actually on the MACD. It's not actually, well, actually, no, I mean, it is on the MACD. Hidden bullish divergence, it's just kind of properly hidden in the sense that there's a tiny little red bit here and it's hard to see because there was no previous lower low region in there. The accumulation distribution indicator showing that we've only just come back down towards the neutral line. This is where you'd hope to obviously see it getting a bounce if it's going to get a bounce. As we can see over here, that's what happened. Over here, that's what happened. That might be behind me. So just there, you know, it happened with the lows, etc. So that's what we're looking at on this one. Pretty nifty stuff. That's probably just about the best technical analysis you're ever likely to get ever on that yet again, you know, and it's always slightly different when we do it on the show, but it's effing good. Now, I've had a super chat come in here. I'm going to take a look at that. We're currently sat here at 17 minutes after the hour. Just going to take the next 3 minutes to bring us up to 20 past, and then we will look at those news headlines. It's a bit off from me looking at the news headlines 20 minutes after the start of the show, but I've got this banana in my hand and I want to take a second to actually eat it instead of talking constantly. And also I want to be able to talk about, you know, we'll talk about the news just for fun. It gives everybody the chance to go have that morning wee, you know. I know what it's like. Tea time with Rocky, you know, tea, that's fine. Have coffee. But then you take a drink of that coffee, right? You know, your morning starts to kick off. Your tummy's a bit like, hey-o, hold on a second. Hold on a second here, sister. We're going to have to negotiate the next 20 minutes a little bit more closely. Right, fair enough. You know, these things happen. In which case, I will look at the news for a wee while, and that gives some people some opportunities. And as well, once I've looked at the news for a wee minute or two, maybe then I'll come back and do a summary. I'll look at the news for 10 minutes, and then I'll come back and do a summary of the TA that we'll be doing, you know, anyway again. So you don't, but it's just stuff that's kind of, you know, all good stuff. But you can come back sort of when you feel comfortable. Good, or indeed you stick with us throughout the time because the news is fun. It's always a good time. I'm here. I'm still here. So yeah, where's my Streamlabs button? I need to bring me up. I need to bring me up to the big screen. Get me. Put the spotlight on me for a change. Put me in the spotlight for a change. There's the chat on the screen. Look at that. Good morning, pal. Good morning. Good morning. So where was that super chat that came in? Where was it? Stop hiding it on me. I really need to take a second and eat this banana. Gaston, we Gaston, this is a banana. This is a banana, shortly to no longer be banana. Shortly, instead, I'm going to replace this banana with hopes and dreams and, of course, self-determination and the will to succeed. That's what I'm going to put in my hand instead of this banana. Whoop! Oh my God, it's gone. Apple Blossom saying that I like moving it around more than eating it. Who knows? Maybe that's what's really going on here. Nobody really knows. Rocky, I don't understand managing risk, says Frost Chris. Good one. Shall we talk about managing risk? Okay, let's talk about managing risk. Let's ask people a quick poll. Ask people a quick poll here. Give me the poll button, YouTube. Come on. Has it just done it? I might have asked people a poll which says, no, I don't know. Oh, look at that. There's somebody talking in Chinese. Mate, buddy, you subscribed to the channel. You needed to be subscribed for 5 minutes just to drop in your Chinese spam. That's incredible. Did you do it by accident? I'm going to just remove the post from the list. Moderators, take a look for that one. Okay, so I've got a poll up at the minute. It's I didn't mean to put this one up, but it's a pretty good one. The question is yes or no. Feel free to join in that. We've got 16 votes so far. Pretty good, yes or no. So let's talk about risk management. I was going to write it out properly, but the question here is, shall we talk about risk management for a second or two? It's a phrase that I chuck out quite a lot of times. Now, if the 20 votes saying yes, that's pretty good. 0, 20 to, it's coming in unanimous, right? So if you didn't vote there, don't worry about it. Don't worry about it. We're all good. It's 100% on the yes style. So, risk management, right? Okay, cool. It's 20 past. We'll talk about the news at 25 past. The next 4 minutes, we can chat about risk management for a second. Risk management, right? So you're taking a risk. Every time you trade, you're taking a risk. Is that right? Is that the best way to look at it? Is that the best way to look at what risk management is? To say every time you take a trade, you're taking a risk. It's kind of like that idea of every time you cross the road, you're taking a risk, or any time you eat out at a restaurant, you're taking a risk. These sorts of ideas, yeah, they're kind of phrases that we push on people that don't really make any real sense when you kind of consider the realities of it on the ground. I mean, most times that you cross the road, you're taking zero risks whatsoever because you're looking across the road. Risk managed, but when you take a trade, you're not taking a risk. Actually, when your job as a trader is essentially in the buying and selling of risk, okay? At any given time, that's what you're doing. You're actually buying and selling risk. Now, that risk has got an underlying name to it. It could be gold, could be Bitcoin, could be GME, could be AMC, could be anything that you like. It could be treasury bonds. It could be forex. Anything that you like. It will have a name, whatever it is. But when you're buying and selling it, you're operating on a basis of probabilities in the first place. And that is actually what you're buying is at any given time is the probability, or indeed you're selling the probability. So let's just take up a chart for a split second here, and we'll go into this in a little bit more detail. But here's a chart, and here I am, and I'm covering up all the indicators down below. That doesn't matter. I'm not going to bother putting myself on the green screen. We only need this top chunk here because we're talking about price action. This is the GME chart just here, for example, right? And we're talking about things like managing risk when you're buying something, and this happens to be GME. Now, maybe it's a bad idea to do this on bad idea to do this on GME, because the audience and myself, as it happens, are just diamond handing this one and not actually trading it. It's unfair to say that we're buying and selling risk, really, because it's not trading. It's more like investing, okay? And that's different. These are different things. And who manages their risk when they're investing? Let me tell you, the answer to that is nobody. If you're managing risk when you're investing, you're not investing anymore. You're trading. And what is trading? Well, trading is the buying and selling of risk. Buying and selling your investments aren't trading, right? And convincing yourself that buying some underlying thing and that you're buying it when it's low and selling it when it's high, that's not trading, right? That's you actually just investing. Trading is the buying and selling of risk, okay? I don't know if anybody else out there talks about it like this, but it's certainly something that I've always looked at it like this. Always looked at it like this, right? And this is just the reality of it. And I'm pretty sure, in my experience, every time I've had a conversation with anybody that's professional about this or in the professional world or anything else like that, they've just agreed. So it's the truth, right? So we can take up any other chart, and there's tons of them out there. Let's go for something that's in the crypto world. KCS, right? KCS. That is the coin that KuCoin use on their platform, right? Just random one here to think about for a while. And take that crap off the charts for there. Right, so in this moment in time, if you're buying this and you're looking at it, a lot of people will like to say to you, you need to focus on the fundamentals and look at the names and everything else, right? And then you look at all the different details about all the stuff in the background. Actually, we're going to be going on for a minute or two longer than 5 minutes here, 4 minutes on this one, seems as I check my watch. So you think and you tell yourself, hey, I'm buying this, but what are you actually doing? You're bringing up a chart and you're looking at it and you're saying, this is an opportunity here or whatever. And why? Well, because you're looking at the ability for it to go up or down in price. And what you're actually buying is the opportunity at any given time to be making money on it, because you're not actually going to build your house out of the tokens that say that you own this thing. You're not going to take those digital representations of something that you own in the world and put it into the actual building that you live inside. You're not going to take it and put it in your mouth and eat it, right? Instead, actually, all you're going to do is own this thing until such times as you don't own it. And you take the alpha and the omega and you put it together and you realize that what you've actually bought during that experience was the risk of not making money or or indeed the reward of making that money, and that's fundamentally what you're doing. Okay, now when it comes to looking at the risk management, you should do that, and you should look at the videos out there on the internet that exist. I think TradeSpotting has one. I should have one on my channel where I talk about things like how much of the risk within your portfolio you're going to take. So for instance, a lot of people talk about risking 1% of their account. So say you were trading with your entire account on this thing just here. You might be taking a trade and you might be thinking about it something along these sorts of lines, right? Just say that you were like, okay, so I'm going to trade this thing, and if it drops significantly below the 200 simple period moving average, I'm going to ditch it, and I'm going for profit targets up there or whatever, right? That's huge. Risk reward ratio 6.82 to 1, okay? Most people instead, if they're being kind of, profitable traders over a long period of time, are instead looking for something more similar to this, where you've got a 1.5 to 1. 1.5 to 1. It might not look like that to you, but that's exactly what that is on the screen, by the way, there. That red area is and the green area there is 1.5 times the size of the red area, and that's 1.5 to 1, 1.5 to 1 risk to reward ratio. This is kind of managing your risk in a sense, just because you're taking a trade, and this trade is not buying the underlying. This trade is buying and selling the risk. What is the risk? Well, this is it here. There's your reward in green. There's your risk. You're halfway towards kind of understanding risk management. The portion of this that's missing from what I'm talking about are the simple things along the lines of how you work out inside your position, inside your account, how much, if this happened and it went down and you closed out your position in a loss, how much that would affect your overall account. Then by doing it in small amounts at a time, you give yourself more chances across the longer term to be right on these things. And from a broad perspective, whenever you want to be profitable in trading, what you're doing is you're successfully buying and selling risk, which means that implicitly you're successfully managing that risk. So over a period of time, you'd hope then that the 1.5 to 1 risk to reward that you're taking on any trade, given that you've done analysis on it, will overall have profited at the end of a period of time, after a period of a number of trades. And how do you get through that number of trades? Well, the only way you can get through there, realizing that at times there will be attrition on your account, because over a period of time, you can be wrong under conditions where otherwise statistically you would be right. Numerous times in a row. Anybody who's played roulette and just gone black, 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 or whatever will understand that. Anybody who's ever just tossed a coin a lot of times will understand it. Anybody who's done martingale on anything in their life will understand that occasionally you get a lot of things going against you. Therefore, you need to manage your risk in order to be able to not have too much drawdown on your account, so that you've always got enough bullets left in the chamber, or dry powder if you're 21st century type analogy, or like the 19th century analogy, you've always got dry powder left so that you can take the next shot when you need to take it, so that your statistical edge in the market will work for you. And overall, that's what trading is, right? So the one component that's missing, which is the question which people will be asking if they think to get to the end of this, but Rocky, you didn't speak about that, is simply put, how to calculate how much of your account you're wanting to put onto your trade that you're making at any given time. Clearly, that's going to be determined by things like leverage that you're using. Clearly, that's determined by the overall risk amount that you want to be taken on in terms of, say, a percentage. Obviously, it's going to be determined by these sorts of factors which you know personally, which I don't know, and you can go ahead and look at that information anywhere in the world. But risk management is essentially at the very core of what we're doing here, because a successful trader is obviously managing their risk, because whether they know it or not, what a successful trader does is operate in an industry whereby they buy and sell risk. It is what their job is. Stop convincing yourself that you're buying and selling Bitcoin. You're not. You never have been. You never will, right? That's just not happening. But you are buying and selling risk. Quite often, you eat that risk right the way up, because you're convinced that what you actually bought was Bitcoin, when you didn't. What you bought was risk, whether that's spot or whether that's leveraged. You bought risk. So whenever you hold on to a position that goes completely to zero, what you've done is you've held that was the risk that you bought, not that the stock went to zero. Okay, now you understand what trading is. That's very key. I do this lesson maybe once every 3 months on the channel, and I make it really kind of, emphatic. That's what you're doing. That's what it is. People around me, I invite you to talk in in that manner. If you don't talk in that manner, it's liable that I'll be reading through it thinking, what does this person really mean? And having conversations with me directly to enhance your own trading is better if I don't have to think during that, what does this person really mean? Instead, if you can just say what you actually mean. So if you understand what's actually going on, well then that'll facilitate that a hell of a lot more. Brilliant! The news! Hello! Ding dong, the news is dead, the news is dead, the news is dead. Ding dong, the news is dead. That's the bloody news. Yeah! So, we're coming up with some news stories to tell people. Here's one. I'll just stick it on there for us. Right. Matt Krantz. It sounds like Marantz Rants, but it's not. It's a completely different name. Shout out to that guy. He does YouTube videos. He's got a blustery personality. Analysts are saying that you're going to lose up to 30% on these 10 stocks. Ooh, well, Yahoo Finance. Take me, Yahoo, take me to the website. I've always relied on the kindness of strange websites. Investor Business Daily brings us this news today, people, that there's analysts out there. They're the guys that exist in the dark corners of the world. Who are they? What do they do? And they're saying that you're going to lose. That's it. You're going to lose 30% on these 10 stocks. Well, what are they? They are the... Make this easier for me to read. Thank you. Okay, they're these ones. Moderna. Analysts think these stocks are at least 10% overvalued. Whoa, you've kind of pulled back a wee bit on your headline, dick face. I was looking for downside. Here's 30%. There's one that's 30%. This was clickbait. Investor Business Daily, you pack of arseholes. Here we have this one. Moderna, they think it's going to drop mRNA. Let's go. Fact check. Bidding. For everybody out there that's a big fan of Lou from Wall Street, of course it's completely impossible to fact check Lou from Wall Street. My goodness, that's such the fact check me. Okay, Lou, it's impossible to fact check you. That's the fact. You're repeating that. You're a bit of a cheeky bastard. That's the fact at the bottom of at the end of the day. Anyway, fact check him. mRNA. Let's do it. mRNA. Moderna. Is it pooped in the scoop? Let's see. It is a bit extended, is it not? No divergence on that one. Let's just see. No divergence on that one. Pulled back so far to this area. Where would be the last point that you'd be taking a look at this one from realistically? Big time market lows to highs, most likely properly important. What are these earnings like? 8.4% higher, surprise of 50 cents, up at 6.46 instead of 5.96. That's no way bad at all. But we did learn in yesterday's show that, of course, when you see those positive earnings, then, of course, you know, should they dump or not? Big time stuff here. Pardon me, sugar. If we were to drop to the 236, we'd be seeing a drop down of 60%. So in terms of this thing's long-term trend, boy, you'd be looking at massive percentage drops if we were to go down to something like the 618 over there. So that's an interesting one there, and in terms of its long-term sort of where you'd be looking to. But would you actually be measuring it from that point right there? I wonder to myself. I think actually, the last major low in the market was actually over here for them, and that came in at March 2021. They've done very well since then. Now they're right on the 236, but they found a bounce so far. Well, realistically, this makes a lot of sense to me, right? So it's not about whether they'll drop. Let's just see actually how far they've dropped already. They've already dropped 30%. Wait a minute, when did this news article come out? Let me just double check. Analysts saying that, blah. This was published today. No, 2 days ago. 2 days ago. Why the fuck is it? Excuse my language. Sorry. Yahoo, why'd you put this on the front cover of your page? I'm 2 days behind. Well, hey, Business Insider. What did you do? Were it 1 day, 2 days ago? Oh no, it didn't. It didn't drop 30% since 2 days ago. You're crap. Sorry, you're crap. It did drop 11%. Sure, it did. It dropped 11%. And then the news came out. People read the news. So the news came out there. People read it. It dropped 11%. And then afterwards, it went up 11% as well. Right here at the 236, you know, it's a bit of a pullback. We could see it dropping down an additional chunk down to that 50 simple moving average. If we did see us taking out the pivot point of 357, I'd be looking down to 292. That's another 20% off the prices. That would be where I'd be looking for a bounce. Perhaps here with Wix coming down towards that last sort of knot in the way up, the way where we consolidated at 236 before pushing up. But I'm kind of thinking to myself that really, you know, your last significant pivot point could easily drop down to that 290 area, etc. 289. Not too bad, guys. It just doesn't. It's just a little bit like, you know, we've already had put in a local high. It went down a chunk more. It's sort of like, so what, kind of. But still, let's see what else is there. Healthcare stocks, I really dislike them. Second wave stuff and all the rest of it. Who knows? Moderna has also just been approved for use from 12 to 16-year-olds in the UK, and has also been come back with news recently saying that it had better performance than the other ones. Waters here, healthcare, skip that. Materials, oh, fuckheads, Iron Mountain. Oh, brilliant. Hope they fucking dump. I hate those fucks. Right, Iron Mountain, IRM. Let's take a look at stupid wanker Iron Mountain, IRM. There we have it. Iron Mountain Incorporated over there in Delaware. Brilliant. Are you going to tank? I would like it. Though, double top here. That there, hidden bearish divergence, is it? We're looking at that. It's not quite, but it would be if we put in a lower low, take out that 42.22 area. That's already a 10%, more than 10% drop. Then you're looking at that having been hidden bearish divergence in what would otherwise be and what has become a downtrend at that point. Taking out that neutral line as well. Let me see, of course, as well. So that's all going to tie in together. 42.24 you could say would be your cutoff point on this one. Maybe $41, and then you're just not wanting to be in it anymore. But that would be kind of like $41 would be where you would pay yourself for taking the short if you were short in this thing, with the hope then that you could leave some on the table to take maximum profits down there at the 200 simple with another extra dump down the way. How much did they actually predict would come off this thing though, as it happens? Because, you know, it's not like what did they say here? IRM 14.5% they're looking at. With implied downside, I don't know what the hell. Like sometimes there's whatever. Anyway, right. So that was 2 days ago. Did they get anything like that? That'd be cool if they did for the old Business Insiders. We'll assume that it came out of it then, and it's down 3%. Went down 3%. It's not actually down 3%. It's actually, you know, depending on when they published that article. 8 a.m. yesterday. Yeah, so 8 a.m. on the 16th. So that's the 16th there, and it was 8 a.m. So dropped a bit, but it stayed. It's now back in within the range of yesterday's candle. Anyhow, yeah, this is sort of like, yeah. So it's a stock that looks kind of weak at the top. Fair enough. It's put in a lower high overall, unable to put into higher highs. It's dropped back down a wee bit here, and it's just simple stuff that you can see. Simple stuff in terms of like just managing this with regards to. Can we successfully take out the 236 and perhaps push on? This is obviously confirmed as a local high. If we're unable to do so, then we are looking down towards like that 43.65 area. If you're looking to kind of push this further and further and further and actually trend this down the way, then your target does come down there at the wow. Actually, which one is that? The two? Which one? I can't see this. It's the we're put my values in the center for now. Yeah, the 2.24, right, yes, the 2.24 Fibonacci retracement point right on there at the 200 simple. Interesting, but yeah, right, anyway, these stocks that I'm not interested in all that much. I mean, I hate Iron Mountain. I shouldn't really have any issue against them. It's just I just like seeing all those companies do crap. Lol, no, I have not, says Katie Babes in the chat. Is that the key? Y'all are weird, and just when I think I've got wriggle right away. Well, interesting stuff that's going on over there in the chat land. Here's more news for us, for people who are still looking to and for those who are looking to go boil a kettle and don't like news, and for those who do like news. We're here at 40 minutes after the hour. We'll just do this for another wee minute here. What's the one here? What's the most potent inflation fighting asset class? What are they saying it is? Not all inflation hedges are created equally. I apologize to people out there, by the way, for not having read these in advance. I was struggling to find any news articles, to be perfectly honest with you, before we started the day that I actually wanted to read. I was a bit delayed. So where is it here? The buzz. Retail stocks slumped. Home improvement retail. Home Depot has reported slower. Walmart. Wait, what are they talking about here though? In terms of which one is this? Commodities inflation hedging power by contrast is far stronger. Over the last decade, commodities inflation betas have fluctuated between 7 and 9, meaning that a 1% rise in unexpected inflation would produce a 7 to 9% rise in commodities. Well, inflation is based. I mean, that's. Yeah, of course, right? Because commodities are going to be things that often underpin the price of inflation anyway. You're just buying it higher up the chain. It's a value chain, right? You're just buying it higher up the chain. So that's of course the way that works. Investors certainly have been flocking to Treasury inflation protected securities, or TIPS. So this is the thing. The 10-year on TIPS near a record low at negative 1.08 on Monday. But according to research from index fund giant Vanguard, the beta to unexpected inflation is around 1. That is 1% rise in unexpected inflation would produce a 1% rise in the value of TIPS. Interesting stuff. So that's what Vanguard are saying. And it's kind of, I suppose it's interesting as well that we're talking about Treasury inflation protected securities, TIPS. It's an interesting one there. So yeah, but they are specifically designed as a security by the Treasury to over a period of 10 years to work on a negative beta. So Vanguard kind of telling us interesting information that we ought to know, I suppose, basically is what that was. But that wasn't very newsworthy, I don't think. Yeah, that's new. That's old news. Where's the other one? Yeah, let's bring up that list of the press releases from the SEC. I don't know if you've ever seen this website before. I check it from time to time. Never bother reading any of it, to be perfectly honest with you. But it's always a good laugh to look at it. $10 coming. Oh, $10 coming from Dead Money All Stars. Really appreciate that. Would you take enough off the table at 1.5x to have profits, or just move your stop up, or both? Struggling to work out when to cash in on good guesses. Nice one. We'll go back to that and we'll discuss it a bit more. All of this compiles down to risk management in my mind, because that is your job as a trader, is the management of risk. That's essentially it. And I know that I've taken a concept which is fairly narrow, really, in terms of textbooks talking about risk management, and I've inflated it out to your entire sphere as a trader. I did that on purpose, right? I did that on purpose, and it's about the way that you it's about influencing your cogitation as you operate in the markets. Okay, I make no bones about it. I did that on purpose. We'll talk about these things, and I'll talk a wee bit more about actually proactively managing your risks as we go throughout the show today. You know, looking at the charts, and when I'm talking about things, I'll mention these, and I'll go back to talking about that in just a second here for you too, pal. SEC charges investment advisor and associated individuals with causing violations of regulation SHO. Let's take a look at that. But SEC charges biopharmaceutical company employee with insider trading. Oh, insider trading never happens. No, it happens all the time, as you're about to see. SEC charges Pearson Inc. for misleading investors about cyber breach. SEC charges penny stock company, CEO, and others with multi-million-dollar fraud. That was a good one. That was a good one recently. Was that a different one? Was that the UK one related with that? The same guys, wonder. SETs obtains emergency relief charges to Florida companies with their principal officer and their principal officer with operating a Ponzi scheme. You know, it's happening constantly. SET obtains a court order to stop investment advisors' alleged ongoing offering fraud. $6 million in whistleblower awards. Yeah, there's money to be had in whistleblower awards. Back then, $3.5 million to whistleblowers in 2 enforcement actions. 2 enforcement actions led to that much. There's money to be had if you want to dob in your pals. SEC charges Poloniex for operating unregistered digital assets exchange. Poloniex, a company that's operated as an exchange for a number of years. Bringing up that news from a couple of days ago, actually, just to read into it a little bit more, the Securities and Exchange Commission today announced that Poloniex has agreed to pay more than $10 million to settle charges. Moving on, of course, kind of sweeping away all of the crap with the past on the SEC and all these exchanges, kind of just moving on now. Without admitting or denying the SEC's findings, Poloniex agreed to entry of a cease and desist order and agreed to pay the disgorgement of $8.48 million, a pre-judgment interest of $400,000, and a civil penalty of $1.5 million, for a total of $10.38 million to just get it the fuck away and move on with their business. That's what's going on with that one. So that's the sort of thing that you can find out over there. It's 45 minutes after the hour. Jumping back over to some charts, bringing up GME, for example, here to have it on the screen, and then addressing that question slightly with regards to the question from Dead Money All Stars. Would you take enough off the table at 1.5x to have profits, or just move your stop up, or both? Struggling to work out when to cash in on good guesses. Great question. Let's take this down step by step. Again, To reiterate, the question here, would you take enough off the table at 1.5x to have profits, or just move your stop? Or both? What are we seeing here? Here's a person who's asking a question who is, first off, intelligent, secondly, experienced already at trading, and thirdly, proactively working towards figuring out this solution. And for everybody out there, I would suggest that just sticking to one of those ideas initially as part of a sort of soft strategic approach, or quite a hard actually, no, a strategic approach, a hard strategic approach to your trading, and then operating consistently will highlight to you, with regards to your own trading, where you could have operated slightly differently and how it might have been better or worse. Now, this can go both ways. You could be looking at a chart and saying to yourself, this is going to go higher, this is going to go higher. I'm just going to I'm going to move my stop up. I'm going to move my stop up. This is going higher. I'm going to move my stop up. And then, of course, volatility takes the prices back down there, hits your stop. You were right. It did move up, and you're no longer in the trade. Bit of a tough situation, that one. Understandable, though. Then as well, you could be looking at the charts and saying, this is going to go down, this is going to go down, and just simply lift your profits off the table, close out your trade and say, I'm satisfied, it's done. And then, of course, discover that there isn't even a wick down. It just goes up the way. In what situation do you think is the right way to do things? You know, what really way is the right way to do things? And that's what you're talking about struggling with. I say make it simple on yourself, buddy. Having a strategy which you do consistently will be good. If you're the type of person who finds yourself in situations where you really wish you'd stayed in the trade for a bit longer because you had the direction right, but you're consistently just taking profits too early without the markets even reversing against you, you would notice that maybe over the period of 20 trades and think, right, I'd be better off adjusting this here a wee bit. I could stick in a take profit where I don't expect it to go to. If it goes there, then fantastic. I've exceeded my own expectations, and put in a stop loss up here close to where I was planning on taking profit anyway, you know, and just protect that. Stop losses are about protecting gains, okay? And taking profit off the table is about extracting gains. Protecting and extracting gains are two different things. And it's actually, if you that sophisticated question, you know, went on to become more sophisticated when you said, or both. And you can very well pay yourself for having traded at a profit-taking target where you've identified that the risk profile on that trade changes. That's why you have your profit-taking target where it is so often. It does depend again on what type of trader you are. If you're really choosing your profit based off of your risk profile versus whether or not you're choosing your risk profile based off of what your profit profile would be as well. And there's a lot of different dynamics there. Struggling to come up with an answer is probably indicative of changing your opinion about it regularly enough to feel like that's a struggle. Whereas it would be much less of a struggle from the sort of scientific method point of view if you took a series of 40 trades where in the first 20 you acted one way and the second 20 you acted the other way, and then you looked back at it and you thought to yourself, how did I feel during it? Did I make more money? Did I lose more money? Was I more stressed out or less stressed out? Have I felt more satisfied and confident with the trades I've been taking as a result? What are all of the other issues that go around it that'll take away the feeling of struggle and instead replace that with a feeling of enlightenment and, you know, the removal of ignorance and self and you'll be self-aware. So those are good things to do. Personally, I like to take a bit of profit off the table when it gets to a place where I can say I can pay myself as a trader. I think that's a fairly common thing amongst people who've been at it for quite a while, is the sort of the message you send yourself to say, hey buddy, pay yourself, right? You're in this for a reason. Pay yourself here, reduce that risk, get it so that you've got a free trade on the table. Leave some on the table, it's a free trade, right? Leave some off the table, keep it, whatever. Leave some in your position, because it's now you've got a risk-free trade. Leave that proportion. You know, instead you're not thinking about the struggle of what you're doing, and instead you're thinking about how to enhance those moments or those times across your trading sort of average over a period of time where you've had those outliers, how to get the standard deviation to be the standard. That's really probably what you actually feel, and that's what that's probably what you're thinking when you think is a struggle, is because you're thinking to yourself, I want the deviation to be the standard. I don't want to be operating in a world where I exclusively have to wait patiently for that standard deviation moment to come in and reward me, as opposed to me taking those rewards at the right time. I would suggest to you that doing it consistently across a period of time and reviewing your performance is probably the first step for anybody out there. And of course, I'm directing this to you directly, Dead Money All Stars, but this goes out to everybody that's watching along right now. With regards to another one of those dynamics there, right? How are you getting into a trade at this given time? Are you aiming up towards that 200 simple with a move from wherever it is? Are you aiming up towards that zone? Is that where it is? Where are you getting in at? Where are you getting in at on this one? Where are you getting in at, right? Once you've decided, where your target is and where you're getting in at, then you're looking here and saying, well, like whatever, right? Just drop that somewhere so we can talk about this and get on with the point. Then you're saying, well, look, see the risk to reward. Now, you can't see it on your screen probably right now, right? It's probably a bit too zoomed out for you to see it. I understand that. But here, you can see in the middle of this box, it says risk to reward. Now, this is simple. I mean, you know it yourself anyway as you're looking at the charts. And I know you, Dead Money All-Stars, you're an intelligent guy, so you probably would look at this and just kind of work it out naturally. But there you have it. You can see the risk to reward ratio and using this tool. It makes it very easy. And then you'd be like, okay, so I'm going to operate on a consistent basis of this, etc. And that's where I'm looking to. And perhaps, to yourself, you didn't really fully consider what was going on with your entry here, and you've come back to revisit this at a later time and thought to yourself, oh, hold on, look, this I went for 1.5 to 1, and it's coming in here right bang on where that low was, and maybe the prices have worked down here, and they're going to, maybe this was a, you've come back here and you look and you're in profit, and you're looking at this and thinking, this wasn't the best entry point for me. Normally I'd have rather have entered down here at the low, and I see here that my stop loss is right at that equal low, and if we were to come in down here and put in another low again before going up, then I'd be stopped out of that trade, but it's not the trade that I wanted to do, etc. And you're sat in profit. Then sometimes you just lift the entire trade off and say, F it. Another one is that you'll often, you no longer want to stay in trades past the point at which the reasons for you getting into that trade are in existence. So, for instance, you're thinking to yourself, I'm going to take this trade on the 15-minute time frame, right? This is something which happens to people consistently in my experience talking to people with trading about how they kind of fuck things up. So you're looking over here and you're saying, I'm going to get into this trade on the 15-minute time frame. I'm managing my risk like this, but you haven't actually worked it out properly, yourself in your head. You just actually kind of, you're actually not necessarily knowing what you're doing, really, to be perfectly frank. So you're thinking to yourself, I'm going to trade like this during the day. I'm going to make money by lunchtime. I'll have made money. This is a trade that's going to last me until 4 p.m. at the most, which is like 11 a.m. your guys' time, or something like that. So so that's where it's going to be. And then 3 weeks later, you open up your chart and you're like, why? I'm still only 1% of the way up on this trade. The prices are kicking around about here, and you're like, gosh, I'd have thought I'd have made it by 2 p.m. But then 3 weeks go by and you're like, what happened to 2 p.m.? Oh my god, that's what are you doing at that point? What is that trade? I mean, are you waiting for that? I mean, if you just don't care about the availability of that equity in your account, stick a stop loss up there directly below it. Forget about it. In a couple of days' time, you log back in. Maybe it's better. Maybe it's stopped out. Who cares? Take the trade off the market. The conditions have changed, whatever it is. So it really depends, on so many factors that lead into how you actually take that trade in the first place. And it's the lack of being able to tie these things together and see the holistic picture and understand the full picture of what you're doing as a trader that leads to the confusion down the line, where something which is actually enlightening and revealing and an advancement, and the whole way through it feels like progress, feels like struggle and confusion and not knowing what you're doing. And it's a matter of aligning your perspectives with what your job is as a trader, buying and selling risk, understanding what your outcomes are, when conditions have changed, what the reasons were for getting into the trade, etc., 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 all along the way. We are currently sat here at 55 after the hour. Fantastic that everybody who's here joining me has hit the like button already, right? I don't need to remind people to hit the like button, do I? Do I? Actually, I do, because you're all just human beings. We all forget. We all forget to hit it. Why do you hit it in the first place, though? Why? Well, you hit it because it helps YouTube know that there's decent quality content here. What we have at the minute is a morning show where I'm trying to be fun and entertaining and engaging and all that. But we've also only got 119 people watching along. And so far, I've explained stuff here which is at an extremely high level of understanding, but in a way that's accessible to the entire markets, at least as far as I'm aware. Please do give me feedback if the things I say during a show like this, where I feel like I've gone to great lengths to be accessible to the entire market, or the entire audience of people out there who are interested in trading, please do tell me if I'm still missing the mark. Because I see there's only, there's not that many people watching. There's not that massive an audience, but I'm pretty sure that this is the best quality content that you can get on it. I know that I'm going to get better at doing this, and I always try to get better at doing this. I see that advancement, but I just kind of think like, I need to know that I'm doing the good job out here for people. So let me know, because I can't tell, and the YouTube stats tell me it's not good, but the audience, the individuals who feel like it really is good, tell me a lot. And maybe there's a disconnect there where some people think, really like that guy, he's really sound, I don't want to upset him, I can't tell him that it's no good. I got a lot of value out of it, but I had to force myself to stick around, because if that's what's going on, I need to know this information, right? Because I'm over here giving it my all, and I could give my all in a more appropriately directed way if that was good. Okay, so let me know all the time. You see Vix is up 11%. Oh, the fear markets. Let's take a look at Vix. So Vix volatility index here up 11%. Are we? Yes, it trades at different hours, this thing, doesn't it? Anyhow, wait, what time is it now? 2 o'clock. 5 to 2. Sweet sound. Right, sweet. By the way, I say time when I'm talking out loud most often in UK time, because that's where I am. Okay, so over here on the Vix chart, we see we're at 1811. It has moved up a wee bit. How are we doing here with this one? The diminishing downwards momentum just above the neutral line just there. What's going on with this one? Oh, the accumulation, you're going to see that, of course. And there's no volume either. It's just a price. It's just a calculation. So interesting stuff. Well, this is a difference. This was the longest period. By the way, let me just go up to the 24-hour time frame and show you something here which is unusual on VIX. On the VIX. So when you see it's up 11%, it's only up a wee bit, but this is the longest concerted period of downward movement that there's been on the VIX. Really. Now, while it does tend to do this sort of thing over a long period of time, there's oscillations that happen in this thing. It went up, and this has been a long downward movement. We had long downward movements in the past, like for instance over here in 2008, which is similar to this chunk of time. So if I just take a parallel channel off of the parallel channel, I won't be able to move all at once. Just take a trend line here. Just take a trend line. Take a trend, take a trend, take a trend, take a trend. That roughly kind of shows us this trend here, and then pulling it over the way here and showing us that this roughly kind of shows us the trend here. We've got a little bit more to go. It's a logarithmic chart, so it's really messing things up here in terms of the angle on that one. But in terms of this thing, it's been a big trend for us for a long time. A big trend for us for a long time. So we're going to see volatility on the VIX, which is 10% and stuff like that, frequently, all the time. But we're looking to see if this is going to go whoomp up at some point, and it's not the VIX is up 11%, which is the shock number. It's VIX is up 211%. That's when you start to get the shock numbers, right? Anyway, it's funny, isn't it, that when you think about this is the longest concerted period of downward movement that there's been for quite a while, all happening in the point where you see the golden cross. Now, this is maybe something that's worth pointing out for Vixie vixens out there in the world, is that is look at the interaction between the trend and the and the moving averages there. Obviously, this thing primarily goes sideways, in a sense. Right, anyway, that brings us right back around again to the top of the hour. I do want to say thank you very much to everybody for joining me. And if you do ever do something like hit the share button, wow, what an amazing impact it would have. I mean, I can sit here and talk all I want till I'm blue in the face about how I think this is the best one in the world. This is the best, this is the best, this is the best. But if you're interested in trading, the chances are you know someone that's interested in trading, and the chances are that person themselves knows someone that's interested in trading. And how about, instead of, if you feel like you were recommended to this channel by one of your friends, and therefore your friend is taking care of that kind of feeling of like recommending it because you're the product of that recommendation, how about instead of thinking like that and being such a victim of destiny yourself, you take that empowerment into your own life and be the master of your own destiny, and think about how you could maybe refer somebody else to the channel as well. Who knows? Because a verification from you and a reference from you would mean a hell of a lot more than me. And if you have arrived here as a result of one of your friends recommending you, you are the master of your own destiny too. You can go on your own Twitters and say, I agree, this guy is good. My friend recommended me him, and I recommend my other friends to come along and spread that out there. There's only a few degrees of separation in the world. If the current audience here wanted this channel to have twice as many views, I'm sure you could do it. I'm sure you could. So it's a question of that. What value do you see in the channel here? If you're seeing the value in it and it's only hitting you halfway because I'm making some mistake, then you should be telling me that, because I'm open here and honest and putting in this effort, and I'm not going away, and I do it consistently every day. So I really want to know. Right, here we are, top of the hour. So do we have any other news articles that I'd loaded up earlier on? I think I do have one. There is, of course, a lot of chat at the minute with regards to the reverse repo situation, of course, as well. A lot of people talking about that. I'll revisit that when something really changes. I think that the truth is that we knew that it was going up towards $1 trillion. It's been at $1 trillion for a wee while, and it's a case of kind of removing liquidity from the money markets and sustaining interest rates above negative areas. Max Kaiser and all the rest of it very, very determined to see that we're going to go into negative interest rate scenarios. Of course, it could absolutely happen, but but at the end of the day, it's absolutely a choice. It's a choice, and the choice in terms of where the buck stops is in America. It is, of course, the global reserve currency. And when you see other countries like Max Kaiser will sit there and go, ha! Germany has put in negative interest rates for the last 3 months. Blah! That's how Max Kaiser will talk about it. But, it isn't in euro, all that good stuff, but really, it doesn't have the same self-determination as what America has. So we're really waiting to see how America gets on with this sort of thing anyway. But we have other news out here, such as the UK government launching a plan for world-leading hydrogen economy. It's pretty cool to have a vision to kickstart the world-leading hydrogen economy, set to support over 9,000 UK jobs and unlock $4 billion pounds. I'm so used to speaking in dollars. 4 billion UK Great British pounds, sterling billion by 2030. Now, yes and no. I'm always a little bit underwhelmed with the numbers that come out of these articles for UK infrastructure projects. Always a little bit underwhelmed because I'm so used to reading bigger numbers and stuff like that elsewhere in the world. It's like you're reading this here and it comes off the back of seeing Joe Biden's speech the day before yesterday, where he says that America has spent over $1 trillion in Afghanistan, and then it's like, and we're going to spend $4 billion, so only 996 billion less, sort of, only after exchanges, only 700 billion less dollars over the period of the next 8 years, investing in trying to not fuck the world up anymore. Anyway, the numbers are still very big, right? The numbers are still very big. It's just, whatever. Tens of thousands of jobs, billions of pounds in investment, and new export opportunities will be unlocked through government plans. And this is an interesting one because it comes on the news website of the UK government's own website. So this is straight out of the propaganda wing of the UK government, of course. I'm not being a conspiracy theorist or anything like that. By the way, propaganda comes from it used to be the announcements from the Pope and all that sort of stuff. It's only kind of really since the 1930s that propaganda got given a bad rep. But this is clearly what this is. Good stuff though, and I'm interested in it. It's funny that it's got this hydrogen, this UK focus, and it's speaking about UK. Anyway, in Scotland, now there isn't many mentions of Scotland in this thing, but of course this is what I'm interested in, and there's only one one mention of Scotland in this entire article. And when we know it is focused on hydrogen and less to do with renewables as an overall thing, you know, it's not talking about too much talking about offshore, etc. But it does mention in here, as such, the government has today launched a public consultation on a preferred hydrogen business model, which, built on similar premise to the offshore wind CFDs, is designed to overcome the cost gap between low carbon hydrogen and fossil fuels, helping the cost of low carbon alternatives to fall quickly as hydrogen becomes an increasing role in our lives. Alongside this, the government, where was I talking about offshore wind? Built on a similar premise to offshore wind CFDs. So, these are these investment strategies. So anyway, it's got one mention here. In Scotland, the Acorn Hydrogen project, located in St Fergus, Aberdeenshire, is taking advantage of existing oil and gas infrastructure to reform North Sea natural gas into low-carbon hydrogen, with the emissions created from generating the hydrogen. And it's interesting. Northern Ireland, what it's doing is using buses, right? In Wales, it's demonstrating how hydrogen from renewable energy can help carbonise cement manufacturing, decarbonise cement manufacturing. In England, it's industrial fuel switching competition. Unilever, alongside Progressive Energy, are running a trial to switch an on-site natural gas-fired boiler to hydrogen. Note here, this is the only interesting part of this article for me. In Scotland, we make the shit. In Northern Ireland, they put it in buses. In Wales, they do little kind of fun experiments to show people stuff. And in England, they change the power plants that uses the shit. In Scotland, we make it. And in England, they do it. Well done, England, on the road to UK net carbon footprint as a result of taking, of course, the actual net result from Scotland. Not to be solely disestablishmentarianist over here, but I do want to point out the fact that this is, of course, a propaganda piece in that sense. Anyway, that was a bit interesting. That was my take on it. Here we have it. Back on over to the charts. The markets will be opening up in 24 minutes. And we are really, really, really hyped and prepared for another good day. I had a green jumper on yesterday. Don't be alarmed that my jumper isn't green today. But I am still, of course, positive about everything over here on the charts. Bringing up the 4-hour time frame for GME. And looking in here now, that trade kind of idea here is just on for a laugh. And let me make my background transparent at this stage. Woo! I'm in the charts again. Let me just double check that that's indeed working on my Streamlabs for a split second here. Am I in charts? Woo! I'm in the charts. Excellent. So, but I need to move it over to the right a fair bit. I imagine I've probably been blocking quite a lot as I've been chatting throughout the show today. Well, hey, hi, hey. I'm one with the charts. And I'll move that down here. How far can I stretch? I can stretch as far as that. Right, okay, cool. Wait a minute, actually. Wait a minute. Can I be cool for a second? Can I just be cool? Take me and make me like this. Yeah! Yeah. Fuck it, man. This is it. This is it! Come on. Up you get, Pi-Fi. Stop putting yourself down in the bottom of the screen. Up you come, buddy. I'll demonstrate. I'll show you the way here. I'm in the charts. We're in the charts. We're all in it together. In it to win it. That is it. Yes. Brilliant. Nice one. Nick in the chat says, I'm at work, but you just popped by to drop a like and say that you rock. Thanks, man. Thank you so much. Everybody out there knows, of course, at this stage that while on the one hand, I'm not able as a YouTuber to actually, directly say to people what you would do in order to game the algorithm, because that's massively against the terms of service. It's also at the same time completely clear to everybody watching along that YouTube really values watch time. So that would be all that I would talk about in that sense. But great content, Rocky Outcrop. Oh, that's it. I know this is something, just don't know what, lol. I wonder what you're chatting about in there. Electro Boy, what are you saying? If you want, I can give you some assignments that would help you develop that kind of thinking while also developing your artistic skills. How awesome is that? Wow, that's amazing. Oh, shout out to Sarah Restano, how are you saying your name, Sarah? Shout out to you. I looked at your YouTube channel earlier on, 126 subscribers, no more, 127, Sarah. That's me. I subscribed to your channel, saw your funny Johnny Cash cover, and your other thing about makeup. I thought how to apply your makeup was pretty good. Have you ever seen Basic? How to Basic? Have you ever seen How to Basic? That is good. You should check out How to Basic. If you haven't seen How to Basic, you'll like it on YouTube. How to make a hamburger, whatever, right? You'll see it. Just click it and enjoy it. Don't read it or look it up. Brian Burrington, there you go, there's a good name, alliteration all the way. Dead Money All Stars, thanks. If prime brokers are using RRP, then could they be using it to get collateral to meet margin? That's an interesting one. It's an interesting one, isn't it? I think that the thought process isn't fully thought out there. If banks have got lots of money, are they using a system where they give their money to somebody to get a security overnight to protect their longer term positions, as opposed to, for instance, buying something which might go up in value? Is that what's going on? It's a good question. It's a seriously good question. But I would encourage people to think about it from the point of view of, are we seeing banks with money take their liquid money, put it into something to get a treasury to hold overnight when markets are closed, to support their margin in their positions, to then give it back the next day and have cash instead of buying securities, and what that would really mean? That would probably be a good way to start kind of tackling that subject. Right, cool. Katie Babes is saying, yes, I have. Well, that's interesting. You're coming up a lot. Hit it, good sir. Thank you so much, GME T1000. Guitar Outside says, I like when you pause and ask us what is likely to happen next. Feels like those kind of assignments. Cool. Okay, we should do a bit more of that then. Excellent stuff. Let's do a bit more of that. Let's do a crypto summary, right? I've already done one at the start of the show. Sarah says, Rocky Outcrop, you are the bomb. Thank you so much. Thank you for the sub. I pronounce it Restino. All right, cool. All right, I see that, Sarah Restino. Hey, Restino. How you getting on, Restino? You doing all right out there? Hey. Right, I'm in the charts. Are you in the charts? Let's get in the charts. Eat some farts. That rhymes. What will we do? I wanted to make a clip for the crypto peeps, right? We're back at 45k. Bit of a pivoty point here for us. Do we want to talk about this and talk about how it might struggle here? Do we want to talk about how it might struggle here, and it might, you know, it's like the move on this one is kind of only really up to 45,900 currently, until the risk profile on this thing kind of changes, as we can see here. Do we want to tell people that? I mean, a lot of people haven't got the benefit of having, you know, tuned in and watched all of our chat over a long period of time, and just dropping that on them might be a bit harsh for them to hear. I don't know. Maybe instead we talk about something else. If I take this move over here from that high to that high, and I pop it in over here and I say, we're not out of the woods yet, then that might be something that actually appeals to people to go along with that message. How about we talk about that then as the overall thrust on this little Bitcoin crapadoodles that we do here? How about that? That might be the thing to put out. I'm only going to make it like a 2-minute video just to give people in the crypto world some knowledge of where we stand right now. The analysis we can do right here together to make it so that it's what am I doing here? So that I can, so we know what's going on. We can do this together just now here, or ourselves, right? Sometimes as a Scottish person, I'll say "werselves," WURSELVES, werselves. It's a Scottish thing. Daniel Assange drops a $5 in the chat. Thank you so much, mate. You didn't put a message in. I'm going to assume that you're just doing that for good luck. $5. Thanks so much, man. I really do appreciate it. So yeah, we've got that wedge type idea. I'm not massively keen on the way I drew that in, but I never draw them in. I deliberately, if people who've watched a lot of my older shows will know that I deliberately draw in diagonal lines in a sloppy format just to show you how, you know, some people out there will try and impress upon you that they're like, you know, their lines are the best ever. I'll show you that my lines are the best ever, and I'll draw them in, not giving two shits as I do it, right? And that'll be a bit more, a wee bit more perhaps handholdy and a bit more confidence building. As you can see, I've just spent the last minute trying to rearrange that so it like kind of lines up properly. And oh, now it pushes out down outside of it, but does it actually? No. Love, love, love. I hate that guy's song now, by the way. It's official. I hate it. That'll do. And I make this a bit thicker so they can view it a bit thicker. How about that? Big, thick line, make it red, so it's kind of slightly alarming on the charts. It's not red enough. It's a bit red. It's the white background. I'll make it, I'll just make it yellow so it's like visible. I guess that's why the nuclear symbol stuff and the warning signs are yellow rather than red most of the time when you're looking for warnings. Maybe it's something to do with color blindness as well. I wonder about that. Anyway, right. So yeah. Right. That's that side of things. Then I'll also talk about the accumulation distribution, and we are doing we've not done anything of real significance there, so I'll skip talking about that. Talk about volume, nothing significant there. Talk about MACD, nothing significant there. Talk about RSI. The RSI is the only part where you've got the potential for hidden bullish divergence. I'll mark that in now. Love, love, love. I'll leave that off the chart so I don't have to just leave it off the chart. Leave it up there. Right. Whoa, what's that? $20 coming in equivalent, essentially. Thank you so much, Generation Ape. Massive. Don't give up. Don't give a F. You and Jimmy just do you. Effing refreshing to have you guys providing the decent TA. Down. Don't know if you meant to wrap that, but I felt like that was kind of worth reading out in that format. Shake your booty. Shake your booty. Shake your booty, shake. What are we looking like on the 1 hour time frame? People want to know about crap and the small term time frame stuff. Yeah, so just got a cross there as well, desk cross, so that's not looking ideal in terms of short term time frame. Do we push on down to the lower area? So that's the chat chime in there. 24 hour time frame, what are we looking at? That we've not, that is the last low. Danger in terms of where we put in our higher low. This calls for a Fibonacci retracement, by the way. What just happened there, for people watching along that want to know what went through my mind, is that looking at the daily time frame, I can see here that this was the last low, that we're challenging that now. If we did go down to these measured moves, we'd be taking that low out, and I'm trying to establish then at this point how far could we retrace against this upward trend in order to put in that low. And then I'd be looking at just like, could we go down a little bit further? That's 41,300. If we pop this measured move in just where that comes up at, that's actually the full measured move there, if I'm perfectly honest about things. So that's what the 24 hour time frame is really kind of showing us on that front, and that's probably worth talking about as well, all on the basis of if this here doesn't work, right? So coming back, oh, I know that's off to the left, I'll just pop this over to the right a wee bit. So coming back to that discussion that we were having right throughout the show before I make this clip about risk management, here we're looking at this area just here on the charts, on the 24-hour Bitcoin chart, and there's a low and there's your prior low, and we're saying that this is the area that if we were to take this out, then our risk profile changes massively down into this zone just here. So what you're looking at in terms of how far does the price have to move from where it is even right now, even though at any given time that's the funny fallacy of price, is that you think that the price right now is the right price, but everybody that's trading it knows that to buy something as soon as you open up charts and look at it is almost certainly statistically the wrong price to buy at. Almost always, like 99.999% of the time during any given day when you open up the chart, that is not the price to be buying it at. Everybody knows it, but we still look at it and go, what's the price? Anyway, if you were to be buying this right here at that price and looking down to where the pivot would be, then you're talking about the potential for a drawdown of about 2.8%. Whereas if you were to then sit in that zone and take the risk of us going down a further chunk to just the 236, that's 3.54%, which is obviously more than 2.8. And if you're to go the full way down, that's an 8% risk. And this is talking about risk management. So why would you think about cutting your losses at 2.56? Well, it's to avoid the loss potential of an additional 5% there. And then, of course, you're able to, of course, re-enter that position if you wanted to, or whatever, at the point at which you feel like there's actually momentum going in your favor. If you're trying to buy now at any low along the way, you'll be getting better value, but of course you're catching the knife. Buying into this point just here is up against the 200 simple in the daily time frame. Only a madman would buy right here at this particular price point on this particular chart, because that's just not what you do. I mean, history tells you it's just not what you do. There it is over there telling you it's not what you do. There it is there telling you it's not what you do. Here, freaking all the way back over here, it went up, right? Sorry. Over here, telling you it's not what you do. Over here, telling you it's not what you do. You know, so people tend to operate on how things normally go, right? So that's that. I hope that's useful for you, okay? I deliberately took time out of the way to do that. It's 20 minutes. It's 20 past 4, coming up to it's 20 past 9 a.m. in Americana. So if you are enjoying your coffee with me, I hope you're having a good day so far. And if you're going to choose to hit that like button, I would really appreciate it. I've seen a message coming in here from Sarah Ristino to talk a bit about Cardano. So maybe we can do that during the chat here. I'm going to start doing this video right here. And I've explained this in quite a lot of detail. This is the type of content that I would put into any episode that I would ever make about anything that I ever do. And it exists in the entire backlog of the entire show that I've ever put out there. At any given time, you can look back at any pivot part in the market, you can see my TA, and feckin' hell, it's normally pretty damn glorious. You've got a solid 8 or 9 out of 10 chance of it being a really freaking good, worthwhile endeavor to go back and look at any time in the past on any topic of any asset that I ever looked at. Is that good, really, genuinely. So that's why they're still there. Well, I still think I should probably remove them for YouTube stat point of view, but I'm about to do that just now, okay? Again, and this is my opinion, but I make these episodes and I can't, it's like Limmy with his comedy, right? Scottish comedian. I have to make the best quality stuff that's for me, right? If I think it's the best quality stuff, then there'll be one other person out there who thinks is the best quality stuff. Where if I make something that I know is shit quality just to appeal to what other people think is good quality, then I'm not doing that. It's just not what I do, right? So, and it's just not what successful people do in terms of what I would consider to be success. Because frankly, you know, I would be more financially successful to not be doing YouTube at all. I would be making easily at minimum 4 to 5 times as much money as what I'm projected to make at the best possible outcome from my YouTube salary this year. Minimum, by doing anything else that I'm qualified to do in this or any other Western country. So, you know, why am I here at all? Well, it's not to fucking do that. Right, anyway, so here we have it. And by the way, all donations and all the rest of it massively supported. It is my income, by the way. I hardly trade these days in comparison to this. It massively drains me, but I know that I'm putting out such good value. I know it. Because it's what I want. Right, sound, let's do this. 22 minutes past, I'll try and get it all done before markets wrap up. I know that that's what people want, of course. So, you know, I know I've banged on for a wee bit, but that's what people want, and I will be doing that right here, right now. Just need to kind of arrange the screen a wee bit so that I can introduce the show properly and then start recording. Hi, oh, sorry, I was still speaking when I said start recording. Hi, I'm Rocky Outcrop. This is Crypto Technical Analysis. Right here, right now, we're going to be talking about the Bitcoin price action. I'm going to bring the chart up behind me in just a second. This is filmed during a live stream, as you can see, so do join me for one of those. We're going to look at Bitcoin, talk about the short-term target, where it's going to go to next, most likely, and then the next area where you're going to get your best buy. Seriously, it's this type of content that will change you from being, oh, fuck it. Sorry, screw that. Wait, what's going on here? Streamlabs crashed. Totally can't tell what's going on. Just a second. Don't know if it's crashed. It's crashed, and maybe I'm not even streaming anymore. Rocky doing God's work. 8 minutes till open. Thanks. I can see that it's coming up on screen, so I'm probably still streaming. It looks like I'll not be making a clip though because this record button's broken. Why are you so crap? I'm going to go back. From next week, I'll be using just standard OBS. Streamlabs is consistently annoying me. For the last 2 weeks, it's just buggy and it's not good. I'll come back to it in a month when they've sorted it out, but it's crap. Something's up with this. It's crap. So I can't record my things. I can't make my clip that way. I'll still make it in a sense. I'll just need to remember that we're 7 minutes till market open, so that's pretty good. I'll just go with that. Hi friends, I'm Rocky Outcrop. This is Crypto Technical Analysis. In this segment of the show, we'll be looking at the short-term targets for Bitcoin. What I mean is where you could trade it to today, but we'll also be looking to where the best buy price would be if you're looking to actually maximize your profits trading this thing over the near term. I'm filming this during a live episode. Do join me for one of those one time. I would really appreciate it. And we'll also take a look at a couple of other coins, including Cardano, and take a look at where we could be going. Somebody in the chat, Sarah Restaino, shout out to you, says, I would like to know more about Cardano, so we'll do a bit of that during the show. Here's my intro clips. It's during this point that I ask people to hit the like button. I do speak over the music. Isn't it really tantalizingly nice though? It'd be nice to hear that without me speaking over it, wouldn't it? Well, if I didn't have to ask people to hit the like button so much, maybe you'd get to hear that from time to time. Whoa, green screen in the charts. Here's Bitcoin up beside me. Right here, I'm looking at that box right there, okay? If this prices enter this box, we could see a drop down. First off, from the high of that box down to this white line, that represents about 3.5%. Then from that white line down to the lower end of this box, that represents another 5.5% or so on top. This entire box here, if the thing would work, is represents about 7 to 8%, about 7.8% actually in total in terms of that movement. That comes in here at this pivot point when we're looking in terms of the previous low on the charts for us, right? So this is how technical analysis works. I'm just doing it with my finger instead of the mouse, as I normally use the mouse on screen. I'm just doing it with my finger here. So if the prices take out that prior low, and where is that price? Well, that price is in around about, I need to flick off a Streamlabs so I can see this thing, 44 grand. So you're taking out the 44 grand area, then it's probably not worth staying in any trades, you know. From where we are now down to that pivot point, you're talking about a 2.5% drop down the way in price, and that would be, of course, where you'd be cutting off. So that's kind of a longer term thing. We'll come back to that in just 60 seconds. But right now, what we're going to look at is how you'd be trading this in the meantime. And here's the 1 hour time frame. And what we're actually looking at is how there's that death cross up above, or sort of, so to speak, the negative cross between the 50 and 200 simple period moving average, and that you could be looking up here. You could be looking up here for a test of the 50 simple, or indeed even a test of the 200 simple, by the way. So let me just bring up Streamlabs so I can point at these things with my finger again. So you'd be looking at a test of 50, that's that blue line just there, or a test at 200, that's that white dotted line, and that's somewhere going up to like 48 to 40 to 49 grand. So I'm looking and saying, you know, you could be targeting up towards excuse me, just a second, I think I read those numbers wrong. 45,800 up to 46,000. Sorry. Looking between 45,000 up to 46,000, you know, 45,800 is kind of like your target for today. And then looking beyond that is actually talking about a different risk profile to where we are right now. Okay, so like that's at that point you think, well, if we did see rejection from there and pull back down, then what we're looking to is going on for maybe the full measured move, or indeed perhaps a test of that white line. And that's why there's that dynamic there, and that's what I meant about looking at it and saying where you get your best buy prices at. Here's the 24-hour time frame again. That's where we started off, I believe. The 4-hour time frame is equally showing us that there's that kind of, you know, that lack of well, I mean, at the minute the price is, you know, between 45 up to 46. It's only a $500 move, but if we get rejected at I've explained it all already, and I can't even be arsed making that in a clip. Sorry, I've just lost motivation there. Look, the thing about it is, above 45,500, that's like a pivot point in the market, right? But if we fail it, then you're looking at a range down to 44. That's kind of the where their wicks are coming in at on certain time frames. Taking out 44, you're going down towards the 236 Fibonacci retracement point. That's where is that where that? No, that's not the Fibonacci retracement point. What is that line? That's a line that I drew in there for a reason, I assume. It's also where the 382 Fibonacci retracement point is at, though, and that's the significance area there. Having been rejected from that high, then if you were to draw in a Fibonacci retracement from the most recent lows, and that's going to be from down there on the August the 5th up to the most recent highs up here, then you'll see that we're currently below the 236, and that's the movement between this region is pushing us down and towards those other profit taking zones on that one. There's a measured move that comes off the back of this wedge that takes us down towards this lower end of that box. That's why that ties together with that 8% thing. If we were to be rejected, it's a bit, you know, tempting to say it could happen at 46k. The reason why I'm saying that is because 45,500 is the pivot, and moving up there and wicking up and then coming back down below it would then, of course, you know, leave us within that region of flux. We've only got 1 minute and a half or so until the markets open up, so I'm going to just actually bring up the Cardano chart for a second here. When Streamlabs doesn't cooperate with me, it's strangely demotivating in terms of my emotions at at the time, which is really kind of annoying because I really genuinely want to help everybody that's actually here right now with education. But I'd already done the education thing, and that was kind of what it is. Finding us in here at the lower end. So Cardano's gone and done exactly what we talked about here, right? Cardano, you want to know more about Cardano? Cardano is a blockchain. It's being made by a bunch of academics. There's lots of good things about it and lots of really shite things about it. One of the shite things about it is, Charles Hoskinson himself is really slow and arrogant about his project. Why? Well, academia, maybe that's a good thing for it to be. It's also, it's only getting to the point now where it's releasing its sort of main net. It's been struggling for a long time to keep up with the advancements of the other major blockchains out there that are actually, been in development for quite a while with such a massive access to funding and, of course, professional people to work on it. Is it a good thing or a bad thing? Well, yeah, it's actually quite good because it's academic. The way it works is actually peer reviewed throughout, so it's actually quite good in that peer review sense, and it's worth kind of giving those guys their due in that sense, right? But at the same time, they're not got that same rapid dynamism that other ones have got. They don't have, for example, the ability to launch tokens on top of their own token, and the cryptocurrency that I'm planning on making would actually be able to do that if I just kind of let it happen, but I'm not going to let it happen most likely, sort of thing. So it's like why so far behind? I mean, is it really that best technology? Anyway, we did an Adam and Eve here. We got the measured move off of it. It came back down to test the 50 simple at the edge of our liquidity zone. Yes, we pushed down exactly to our target of 187. It's almost freaky. It's freaky. It's that good. It was that amazing, and I spoke about it and I said that exact number, and that's where the prices went. Now we're back up again, but unfortunately, we're now at the time when markets have opened and I don't have any time to further this out the way. Let me just let the drawings here speak for themselves. Here's a pivot point in the market that's below where the prices currently are. We're actually at a point where, finding our support here is happening at a previous inflection in the market. So we're at a resistance support point, which is very, very, slight, but it's there. We've dropped down here. We found support so far, and we could, resurge back up the way until such times as you've taken out your 236. Go ahead and draw one in yourself properly. Oh, we are above it, but it's like $2, not as good. And we're still waiting to see how this thing pans out. There's the Fibonacci that I had drawn in before. Just left it up the top. You can see that this is the same one, essentially in terms of the 236 for us as to where the 236 from that high to that low lines up. Again, same point, massive inflection point in the market, 196. I could go on and on and on and on and on and on. Trading from here up towards profit taking targets. At the meantime, it's going to be 216, afterwards 230. GME. Of course, we could continue to drop down there. That's also part of the analysis. I'm sorry if you're missing out on something there. Just check out my previous episode's analysis on it. I've covered it all. It explains why we've come to where we are just now. Here's GME. This is one argument that some people might make in the world, by the way, is markets are open at this minute in time. We see that the current prices are 164.33. So what some people might be thinking in the world, of course, is that this is a channel or indeed a wedge of some variety. That can happen. You can also see that there will be some people in the world who've got arguments that go along the lines of high to low. That's 1, 2, 3, 4 up to here. That's wave 5. That's the end of wave 5, etc. Just now. Sorry, wait a minute, that's wrong. 1, 2, 3, 4. That's the end of wave 4, and that we're going in for wave 5. People have been talking about that. We know that we know what the chat is here. 4-hour time frame, 50 simple moving average up above our heads in this area that could easily be considered to be a channel, but could also, as a zoom on in here, zoom on in, zoom on in, zoom on in. I also point out that this could also be considered to be a wedge, which is obviously a negative pattern. So then what does this do? Well, it gives you the range of the sort of the girth of the start of the thing. You pop that in there. What do you get? You get a higher low. Where's it come in at? Above 150. You'd be looking instead for a bounce at 155. Where have you heard that number before? Well, it's what we're talking about. There's 3 numbers that sum up the current price action: 160, 155, and 165. Where is the current price right now? Note, it is below 165. Wix are indeed taking us up above 165. We're not pushing past that. We really need to go past 166, 50, etc. to get that movement up the way. We're in here. We're asking questions. We've been asking questions recently with 160. We've been asking questions with 155. We've been asking questions with 150. That's where we are right now. We're just below 160 at 164. But the fact is that we're above we're below 165 at 164, but we're above 160. Movements down to 160 at this stage obviously challenge the structure of any sort of wedge that you're looking at. It's debatable in terms of where you put your line in. Like I say, I don't really care. I'll just kind of fling it in there. There you go. Chuck that in. I'll let go of the mouse and I'll let the momentum of the of the thing, just carry it over. There you go, that's good enough for me. I don't really care. These are concepts. All that really matters is you're looking at the horizontal support. At any given time that you use anything on top of anything, you're looking at the key horizontal support. And horizontal support doesn't mean just a fucking line that goes sideways on a chart. That's what horizontal support means. Horizontal as opposed to diagonal. As opposed to diagonal, it means looking at the highs and lows in markets. It means you're looking at pivots in the markets. Diagonal lines merely look at the fluctuations within a movement, right? As opposed to the actual ultimate pivot points in markets, which can only be defined with horizontal lines, and they aren't horizontal fucking lines in the first place. They don't need a horizontal line to exist. So when I talk about it, when I say you're looking to the horizontals, and then it's what you're looking to. You're looking to the actual pivots in the market, and that's how that makes sense, and that's what that's all about, for crying out loud. So that's what we're talking about. So long as we're below 166 currently, then it's very easy to say that we're not above 165, and I think that basically sums up the story where we are. I'm obviously bullish on this in terms of, can we make it out past this? And there's quite a lot of reasons for that, one of which here in the 4-hour time frame, as you can see when you came in for these lower lows overall, has been giving us this bullish divergence for a long time. You know, coming in here, bullish divergence, get a big dose of it, but we're waiting to see how things go. We knew the prices would come to here. This is why I explicitly talked about it so very often. When we get past the 166 area, then we're looking to 186. There's a big chunk of movement in between, dropping down to the 1-hour time frame though, so that you can see that if we were just to kind of calculate this, you know, the top end is at 170 where that 200 simple is at the minute, and we've experienced that along the way. So getting bounced off of that zone, what does it do? Well, it just drags out this wedge that we're in a bit longer. That's where we are right now. That's what's going on in the prices. That's what's going on in the kitchen, and I can smell what's cooking. So that's where we have it now as well, from the highs to the lows. How are we doing, right? Something that we want to know and keep our fingers on the pulse of. How are we doing from the high, which was way up there, all the way to the lows? So I can draw Fibonacci retracement in any way that I want, of course, right? But there's only ways that are correct, and that's going from left to right and go and following the trend exactly. You know, you can only do that if you go from left to right, so it's quite easy. You go wick to wick as well. So I, you know, in a lot of senses, I should, just to satisfy people in terms of their understanding of this, draw in over the price action itself. But just let me be clear here, I can draw them in wherever I want. So can you. I can draw in over here on the right hand side and just line it up with the highs and the lows by using the crosshair on the charts, right? Makes things a hell of a lot easier, but I don't do it so often on the show because, like, you know, look at that. That's a little bit less easy to understand. Has it got some time implication? No, it doesn't. What does the implications of the x-axis mean? Well, almost literally nothing. I don't give a shit about the x-axis 9 times out of 10 that you ask me. So that's where that is. The 236 is up there at 192. Okay, 192. So even if we move up to our other targets of 186, etc., we've not changed things quite yet. Following through with the analysis that we've had recently with regards to this potential for a swing failure, currently we are in the mode of actually putting that in. Why? Because we're coming up here towards this high. Now, it doesn't need to be that I've said in advance that that number is 165 and that's what it is to the penny. No, it doesn't. But we do get the general impression here when I'm kind of saying, you know, so long as we're below 166, we're not above the 50 simple moving average and we're not above 165. And you combine that with looking at the RSI here and you can see that we're coming in here to try and do that right now, but we've not quite done it yet, and it would be interesting to see if we were able to do that. If we do see prices ripping on up above, the markets are open, right? Yeah. If we do see prices ripping on up above, then of course, then that's where we could be going to, but eyes will be drawn to a 186 when 170 could be a price point that we actually find an inflection at. First off, just coming in here to say that we've done it and that we could then see a pullback. I want to see retest of the neutral line be supported. The way yesterday we talked about that kind of happening there, or the day before, whatever, that happened. It's fine, and you know, we want to continue on with it. So that's the first chart of the day. That's the first stuff, and you'll notice that I've not looked down at the 1 minute time frame throughout this entire thing. Why? Because I add value to your trading. I make it so you learn stuff and you can actually achieve things in the markets. But here's the 1 minute time frame so that I can get more views on YouTube, right? Two distinct things. So here we have it. Wow, okay, volatility on this 1 minute time frame. It's really exciting over here. Oh wait, let's just look at where the RSI is on it. Wow, the RSI is going to get bounced off the neutral line right here in the 1 minute time frame. If we were to be managing risk on this one, then I suppose we wouldn't want to see it going down past 163.18. 15, and then we'd be looking up for moves. But are we going to carry this now off the basis of a bounce off the neutral line? Oh, let's go for it. Let's manage our risk. Okay, so this is how you could trade off of this, just having one idea. You know, basically the RSI here, it's at the neutral line, just one idea. And I'm thinking to myself, I want to see a bounce here. I want to see a bounce in this region, and we've got the well, that's one idea, and we've also got the 50 simple period moving average in here, which are coming in for a sort of test of. So let's just imagine that we put in a move like that, and we said, right, okay, so let's manage our risk in a sense by saying if we take out the 200 simple here on this 1 minute time frame, that we're no longer interested in the trade. Let's pop this into like exactly where the prices are now to make it so that even though it's not the ideal price to get on it, that I can just pretend that it's already happened. And then we can pop this in and say, well, where would we be looking for in a risk to reward? Well, that would force the issue for us if we were to determine our upside potential off the back of the risk. And last time I did this, I believe I did it the rewards first way round. Is that the way I did it last time? Anyway, then you're looking, okay, actually better entry, woo. Then you're looking and saying that I mean, obviously, right, it's a shame that I want it to go off the 50 simple, right? So anyway, this is wow, okay, this is my entry, got it, bang, we took a trade off the 50 simple, right? And then we're looking for 1.5 to 1. That goes up to our prior highs, brilliant. We can just actually go in there and double top out and fail. This would be our reward, our risk down here. There's the blue line. This is how it would work, right? So this is it. So then what you do is you've decided your risk parameters. You've based it off of something, like an idea of getting a bounce around about the neutral line. That's obviously bullshit at this current point in time because that's not happened. But this is the 1 minute time frame. If you're on a larger time frame, then you know by the time you finish the sentence that you're trying to say to somebody else, the conditions won't have actually changed on what your analysis is, whereas my sentence kind of determining where we have it on this one. Then there you go. Okay, right. So that wasn't very good. Now it's come in lower, and that was not lower in terms of the closure. But of course, this 1 minute we did open up lower because it gapped slightly because there's not the liquidity there. Is it lower? No, it's so close. That's the low. I mean, the low was not lower than the low. The gap down area was not lower than the gap down area. This had hidden bullish divergence. Yeah, I'm going to consider that to be hidden bullish divergence, even though it doesn't comply to the rules. And I'm going to do that because this is a chart which operates on a lower level of liquidity. So yeah, so that's what I'm going to do on that front. And yeah, so I'm going to say that's hidden bullish divergence. We've got a good chance of this. You can see we're struggling at the 50 simple. You know, obviously this is determining the upside based off of this idea of trying to manage your risk around about here, whereas you know what you could have thought would be I'll take a bounce off the 50, but if we're below the 50 I don't want to trade it. I only want to trade it while we're above the 50. You know, the idea that we're doing over here is more similar to what would have happened in this trade, where you've been saying, well, we're getting a bounce off the 50, but I'll stop out if we go below the 200, and then you'd have ended up having to eat that, and then we saw the resurgence back up. And that's essentially the idea of what's going on over here with what we're looking at. But we're below the 50 simple currently, right? So this is how this would work. That would be risk management. I'm not proactively taking these trades, so and I'm moving it around to make the sort of the discussion points with you. But you wouldn't be moving it around like that. You'd have taken your trade, and that would be the reality of it. And if it went down to there, then you'd have to eat it and take a stop loss because you're going to be consistent in what you're doing. And you just would, right? And then if it went up to there, you would take profit because that's what you decided at the start of your trade. Look at this, come down to 200 simple. I mean, this is really hoping for that to happen there. Is a much more sensible way of trading. But you've got the two different approaches here. This taking trades off the 50 simple and managing your risk just below it and not taking these opportunities, and then the ones where you say, right, I'm going to manage risk by that I'm hoping for a bounce off the 50, but occasionally we might get a bounce off the 200 along the way. Boom, stopped out. It failed. Failed trade, right? Failed trade. Just have to accept it. What was the basis for our trading? Well, we were taking trades just basically off of this idea just here, and that we'd find support at that region there, and then we didn't. Right? That's what happened. That's all it is. That's trading. It's not rocket science. Look, we knew when I was saying here that this wasn't really hidden bullish divergence. It's kind of bullshit, but it was forcing the issue, right? We knew it. I didn't bother looking at the accumulation distribution or the MACD. They're both just flat. I didn't even consider volume. Would you consider volume? Would you consider all these things? Yes, of course you would. Let's just look back and see then how these other things looked at that moment in time. right? Let's just look back and see how they looked at that moment in time. This is no big deal because we're just talking about the fact that we're above 160. I'd have rather have traded it from 160 because I said we're below 165. There's three numbers, 160 to 160. So, obviously in terms of this here right now, whatever, I wouldn't have wanted to take that shitty little trade there. With the maximum profit potential being that you're looking for a crappy double top. No, instead, if you're taking a trade from this thing and you're managing it and you're saying that you want to get in it around about the 160 area instead, and that then you're talking hugely different risk to rewards where you can just manage it whatever way you like. It's like anyway. How did the MACD look during that period of time? No divergence up there on those highs. There was no divergence on those highs, and then there was this that point there that wasn't like it wasn't hidden bullish divergence or anything. Then we come in for a low. Boom. Whoa. There you have it. So you get your 160. You see. So you would have got the 160 trade. And that's that pivot in the market, much actually, one that's been identified in advance calmly, much better than the 160 one. Like that's much better, right? Much better. And then you can manage your risk in whatever way you want. So again, here you've got your trade. Where are you looking for your profits at on this one? Are you going to determine how you manage your risk by your profits? That's a question for you to answer. Are you going to do it that way? Are you going to determine how you manage your risk by your account size and what you're willing to lose? That's up to you. If you want to trade with your entire account and just risk on a certain amount of your entire account on a trade, that's up to you. How are you going to manage your profit taken? Now, bearing in mind that from this point up here to get a 1.5 to 1, you only need to see the prices going back up as high as 161. If you're managing your risk with a stop loss that comes in at 159, right? 159 and 162, right? So anyway, that stopped there. So that wasn't the trade. So 161, that's not where you're aiming for, obviously. I mean, that's a crap trade, 160 to 161. Who's actually thinking like that? But this is the thing. So would you be aiming back up to maybe a retest of the 200 simple? Would that maybe make sense? In which case, your risk reward is now 2.6 to 1. So let's drag that down to 1.5 to 1. That means that you could sustain a trade down as far as that. That would be consistent in terms of your approach, right? Your approach is consistent. Are you aiming up to the 50 simple? Dragging that up to the 50 simple. That's where that is. Now 2 to 1. So then again, this is your risk to reward, right? Now, it isn't about choosing these things willy-nilly on the fly. I'm trying to make up a series of different examples on the fly, given whatever conditions happen to have been on the charts in front of our face at a time in order to say, this is how you could do this sort of thing. That's all I was trying to do there. But you can see that it determines if you have a strategy, just one thing that you're doing consistently, and you have a risk reward made out in your mind where you know how you're coming up with your risk, whether it's determined by the reward, whether the reward is determined by the risk, whether there's something else that's determining it in terms of just markets, the strategy. You can also then scale into positions. Maybe you'd have got in there, and then maybe you'd have got in there, and then maybe you're thinking, oh, I'll get in here or whatever, and then you're trying to get some sort of vague average position that ends up being somewhere like there or whatever. So then it's not that you just stick this thing on the chart and you're like, oh, well, it's so clean cut and dry and easy. Different trading styles, right? Somebody might just be doing that. We're like, that's my trade. It's one trade. Other people are like, I scale into positions and then I scale out of positions. That's, it's all to do with how you trade yourself personally. Those factors are going to be determined by the time you have, the risk tolerance they have, the way that you look at the charts, how you understand data, what you're looking to get out of them. Those are the factors that are going to determine what type of trader you are. And the rules and ways that you get into trading will be consistent throughout that, no matter what time frame you're looking at, etc., so on and so on and so forth. If you do come up with an average position size, then you, of course, an average entry, then of course you can manage your risk by saying, well, that's where my average position is, and I've determined that. You could determine that in advance. You could determine that in advance easily. Like this is where I hope to have my overall average at, etc. But I'm buying it there and there and there, and I'm buying it down the way, etc. And you could do that. I'm not going to say that you can't do that shite. Right? So in terms of you're struggling to manage risk, it's like, well, you're struggling to manage risk because you're not fitting the idea of risk into your overall trading approach, and you don't know what risk is because risk is the thing that you're buying and selling. That's what you're buying and selling. It's not whatever's written up there in the top left. It's not whatever on the watermark in the back. It's not whatever it says inside your trading account. Those are investments that you're making if that's what you're thinking of. If you're trading, then you're not investing. They're two different things. And it's risk. You're buying and selling risk, and it just happens to be where you are. And people say that that money flows to different, where volatility is the lifeblood of traders. That's what they're talking about. We're at 158 at the minute on GME. Obviously, I'm dissatisfied with that. Why? Because we're below 160. Am I actually wanting to trade in this area? Not particularly, really, to be perfectly honest with you. Anyway, so I don't rue missing out on trading opportunities. Why not? Well, because we're down here, 50-minute time frame, flicking around the lower end of this. Like I said, you can't tell where it would be. Does look like we kind of pushed down the way there. Would be looking down at 155 at this point in terms of like where things could be. If I were to be buying it here along any of those purchases, that those example trades, you're trying to catch a knife. You're not buying into any resurgence momentum, and there isn't anything that's standing out here saying that this is a good thing. Looking back the way, compared to that low over there, then you're maybe finding some hidden bullish divergence. I mean, the 1 minute time frame is a total laugh. Anything that you see in the 1 minute time frame is probably going to be, although it almost mostly works, it's just too much at risk of volatility from delay caused by people putting in an order at a certain time and then it come up in the next minute, etc. It's the high frequency traders that are doing stuff in those time frames. High frequency traders and over leveraged retail morons that are doing it. Right. So we go up to a bigger time frame though, and where are those lows at? Well, they're nowhere to be seen. Here's a low over here. It is, of course, lower than where we are just now. That's at 157. So on the 4-hour time frame, if we close below 157, then on the RSI, this is not hidden bullish divergence, right? This would be hidden bullish divergence here. Note here as well in the 4-hour RSI, what we did not do is that we did not put in an RSI swing failure. So that's still not happened yet. Obviously, in terms of like the negative trend, at this point, taking out this low over here would be extremely negative, obviously. But here we are looking to see if we can get a resurgence at some point. We did not find a bounce on the neutral line on the 4-hour on the RSI this time around. Not yet. It's not happened yet. What we have here in terms of times left for us is 3 hours and 39 minutes on the 4-hour time frame. So not yet. So where is the anchor point for this hour? Well, everything that's in this section of the RSI is as a result of the current bid-ask market price. The last trade that went through as a taker is determining the current position of the RSI. So the last trade over here is determining this one right now. Okay, so and this is done on closures, not on wicks, by the way, at this point here. So what we're looking is where this will actually close out at, and therefore at this stage live, you're going to see differences on the RSI as it stands right now. If we close below 157, then we will not have hidden bullish divergence on the chart, and that's all I can really say about it. By the way, good to see you out there, Harriet. Nice to see you. Nice to see you. Have you used OpenSea much previously? I've just minted my first NIFTs. That's cool. That's awesome. That's cool. That's cool. You've got no idea what you're doing. That's cool. You're all right though. You'll figure it out. It's actually fairly straightforward. You're doing all right. Another Dave says, it depends if you trend linearly along the mile or if you put the miles on a chart and draw the fibs on like a chart. Out of context sentence, I don't understand that one. One of the tools of improv is yes, and it is the method of listening to your teammate and adding to their idea without taking away from it or derailing the momentum. Have we tried? Yes, and I wonder what you're talking about there. But that's interesting that you talk about it. There's also something from design creativity and problem solving as a big module that I did when I was studying my masters. Thanks so much for saying hello, TradeSpotting. Yeah, hello to you too. Nice to see you, man. So here we are. We're at 10. We're 52 minutes past the hour. Trading has been open at this stage for 20 minutes. and we're waiting to see kind of how the opening range goes for the day, and in terms of these lower term, like, so in terms of like 15-minute candle, etc. It's been negative so far. Can we push back up to those regions? And therefore, unfortunately, the question for the day at this point becomes, can we make it up towards those targets? And then, and looking at it from the 24-hour time frame and saying, why did I just delete my wedge? That would have been much nicer to have not deleted my wedge. If we were looking up towards the top end of that, not the 4 hour or something like that, then we're looking up towards that 170 region. It's actually 166 is where the 50 simple is, and 170 was like where we had the upward sloping sort of supply line. Let's check in on AMC. AMC, the movies. Right, so being supported by the 200 simple here in the 1 hour time frame, come back down to that region so far, having been as high as 38.68 so far today. And the volume so far at the start of the day is pretty good. Overall, the movement towards the top side here, as you can see with the accumulation distribution indicator, timesing the movement here versus the volume down below to give us that number that's kind of pushed up a wee bit. But we're waiting to see if we can kind of, actually, get a resurgence here in positive upward price action. We could see things turning negative fairly soon on that front, given that it's a red candle currently. Now, on the 1 hour time frame, of course, we've not closed that out yet, so we're waiting to see how that pans out. 15-minute time frame, on the other hand, you can see obviously accumulation distribution is obviously flicked negative there with this most recent movement, but we're not below that 50 simple moving average. We've not taken out any of that trend line. The 15-minute time frame on stocks in general, by the way, is a pretty nice one to look at, just like to see these sort of short-term movements. You go back up to the 4 hour time frame and you see how it doesn't really look like anything, but it starts to look a bit extended and stuff like that. Sure, it does, but you look down at 15 minutes and you see these movements. That's kind of sometimes a wee bit nice for people, especially if you've got like that ADHD, need to see something right here, right now. He's trying to manage his sleep and work-life balance, I think. He will be awake just now, but I suspect asleep before I'm live. You're not talking about me. Am I streaming? Does that say Rocky enjoying the stream? Oh, thank fuck, D, man. There was me just asking for, sorry, excuse my language, YouTube. Sorry, YouTube. Sorry, children. That's appreciated because I didn't know if I was streaming for a second there. Enjoying the stream. Could you have a look at ADMP, please? Yes, I could. Thanks very much for the compliment, man. Not a compliment about me, but compliment about my work. For 15-minute time frame, so straight off, you can see the distinct difference between this and the previous one. GME, we know. GME or AMC, we know is a lot more liquid than GME. Right, but go down to the 1 minute time frame on GME, and it's still, it's got movement. It's got movement. This is the most movement there's been in the 1 minute time frame in days. Wow, that's amazing that little moment happened there. We're about to get death cross. This is your opportunity. 158. Yeah, decent, nice one. We'll probably go back up there. I mean, this would be the easy. This is an easy move to make. One of my preferred easy moves to make in that sense. But you can see here, look at the constellation. This is on the NYSE as well, so it's got the actual data. Constellation, it's not very liquid. Not very liquid. We know that anyway, because look at the volume. The volume's all and has been for ages, etc., etc. So it's not a supremely liquid one. Now we're getting a bit more volume here in terms of this small-term time frame stuff, but it's hardly any. Right, so, and thanks very much, by the way, Sarah Restino. Oh, and thank you very much, Carriot. You're saying thank you to me. Oh, no, thank you to you. You'll be fine. Yeah, I didn't help. You're welcome. You're welcome. What did I want to do? Oh, ADMP, was it? ADMP. So going over to this one, you can see this is very much less liquidity in this one. Right, that's fine. Just, be aware that it's going to have certain impacts on things. You can see as well, like the big sideways stretches that you get, like the RSI. Where do you see the RSI operate like that, See this here in the RSI. This walk like an Egyptian on the RSI over here. I mean, it's effing mental, isn't it? So you can see the breakdown in terms of how these things work when you're looking at too low a time frame sometimes, and that'll be determined differently across different stocks. So jumping up towards the 15-minute time frame here in this one, you can see it's still pretty much the same sort of scenario, but we're at least getting some decent candles that stick together. By the way, I will get round to looking at that message that you put in, Sarah, in just a second. I'll read it back after I've done this here. Really do appreciate you sending one in. So yeah, so this is so low, like so just be aware of that, right? That that of course then you can see that ties together, correlates fairly well with these candles that have got a distinct lack throughout them of wicks, right? You can see here the lack of a wick, no wick, tiny wick, no wicks on any of them, no wick, no wick, no wick, no wick, no wick, no wick, wick here, no wick in any of these candles. No wicks on any of these candles, right? None on any of them. None on any of them. Here's one. So we have got one here. We've got one here, and we've got a tiny wee one here. And this is. I'm not joking, right? I'm not joking. Here's another chart. Wicks exist, right? Why do they exist? Because of the trading that happens on the charts with all the different time frames that trading happens, right? There they all are there on AMC as an example. So so what will happen then on that stock is that it'll bump up and then it'll fuck off again straight after ADMP. This is a pharmaceuticals corporation, right? Pharmaceuticals makes so much sense. Pharmaceuticals, one of the this is consistent. I mean, it's not, you're not looking at Procter and Gamble or Unilever over here. You're looking at a pharmaceutical company. It's like it's just mental, and always massively manipulated. So anyway, right? This is where we are. This is where we are with this stuff. That's just where we are. So that's kind of just introducing us to this chart. Needed to be done because it's an unusual one as we come up to the top of the hour. Half an hour left on the show. I'll be finished up this particular section of TA in just a minute. Jumping back over to take a look at Sarah's comment on the charts. On the Sarah's comment in the super chat and any other ones that I could have possibly missed along the way. If there's been any donos, etc., I'll bring up my stream labels and make sure I've not missed any in just a minute. So that'll be cool. So yeah, we talked about this the other day and it pulled back down. I probably mentioned that crap about the liquidity and the pharmaceutical stock, buddy, when we're talking about the time. That's not to repeat myself in a boring way. I didn't recognize that this was the chart that we looked at the other day, and it probably would have. And I'm just auditing myself here. I know that I typically would have made that, probably have given that lesson then as well. It's not bad to have given it again. So we're still looking at this. Yeah. So essentially, right, this is crap on small term timeframes because you're not getting the data. If you think about it in terms of like, it doesn't matter that the x-axis is moved along, like I was saying earlier on, that doesn't really matter. It's about the data points that you're getting with the price action. Here we have it instead on the 4-hour time frame, which is a fairly significant time frame to be looking at stocks, but it's better than the other. I need to amortize all that crap in together. You can see that we're sandwiched between these two, that the 50 simple moving average is right at the current story on this is there was a golden cross, the prices moved up, but they were unable to take out the 236, and the 50 simple is also at that price point there, right at that price point of $1. Oh, I remember we were talking about this $1. Then it dropped down to below. I mean, $1. Was I saying that $1 is a buy price? I guess so, because it's easy enough to manage your risk, probably. But then you would be looking down to like 180 to 89 or something like that for it, and that's kind of where the prices went to. So it kind of sucks a bit. Anyway, that's that. So we're below the 236 currently. Yeah, I wonder what I said about this the other day. Would be really good if I could remember stuff like that. I'm going to actually go to this 24-hour time frame at this point. See where we are. If we came down to the 200 simple here in the 24-hour time frame, the daily time frame, whatever. It could. I mean, it's 12-hour time frame. You know, it's the same thing. Look, 12-hour time frame, 24-hour time frame, daily time frame. None of it matters. Well, it does matter at times, but rarely matters. Anyway, yeah. So that there, higher low, okay. With a lower low on RSI, so we've got some hidden bullish divergence, so that's decent, I suppose. That's that. Bounced off the bullish control zone. Went down here. Yeah, so all three things happening at once. If you weren't already in a trade, buddy, I'd say buy it above that price to carry that momentum up the way, or be buying it here and managing your risk extra tight in terms of just like dropping below the 200 simple significantly. So if it drops 10 cents, 10%, 10 cents, 10%, man, it sucks, right? That sucks, man. That's the thing. Yeah. So right. So anyway, predicting this one, it feels like it wants to be predicted more on this one, right? To me, because of that, like because of the lack of being able to be in a move and everything and that. So it's like, where's it going to go? Because when it goes there, it's done and it's moving away. Then you're looking and saying, I'll take profit at $1 if you're trading this on the tiny time frames, and that's kind of why I'm saying that I'd be waiting for it to see if it can go up them there, because it could slam up to that point and then just come right back down again. With the way that this thing is, when prices are above $1, you've taken out, you've done the 236, the 50 simple on the 24-hour time frame, and you've also taken out the neutral line here, having bounced off the bearish control zone. Taking another stab at that bearish control zone is like, we not being rejected on your first pass. I would then predict that probably, you see the prices dropping down another sort of 30% to 40%, and I'd look out for that. We're now at 5 past the hour, and I've pretty much not got any news left to drag onto the screen because it was like a low sort of news day. Let's just see if there's anything else in the news thing on the Discord. No, there wasn't. That's cool. So let's go and see if Nassim has published anything today. Then we can sort of bully this guy today then, just by going and looking at it. Sorry, Nassim. Let's see. I'll just go and look at your Twitter. Let's see if you've published anything today. Nassim, what have you been writing? 10% pretty confident it can comply with more regulations. Right, sure. Let's see though. Let's just see. I'll just go to their news page here or whatever. News. Let's see what FX Street have got on their news for a split second here. Just a couple of minutes. Gives everybody else who's not interested a chance to go and wee and stuff like that. Come back around for the last half hour of the show. Let's look at equities news, please. FX Street. You're not going to show me equities news? Okay, leave up something else on this chart, so that's not working. Hiya, AB. By the way, AB, I apologize for my swearing earlier on. It's specifically, see when I say stuff and I say, oh, sorry for swearing. It's pretty much consistently yourself, the likes of Christy, etc., that have got young kids around that I really don't want to be a bad influence over. So I'll just give you that wee apology there, pal, because I do respect you. I don't forget that that's a thing. I don't forget about you as a human being. I just have bad habits. Banana fridge, yep. But the star around the tea sipping made me think of Rupert Gint's intonation. Says Apple Blossom. Julian also, I don't know what he's talking about in there. That's pretty cool. So, yeah, what did I miss? Did I miss any? Because I wanted to see that. I need to check and see if I've not missed any of these things. Stream labels, bring that up. Where's my notifications? Your work is excellent. Very much appreciated. You're very kind of you, D. Harker, man. I really do appreciate it. You're a very, very nice gentleman. Thank you very kindly. That's really appreciated. Thank you very kindly, man. D. Harker dropping $95.95 into the donations. Brilliant. If he did on that through Super Chat, then I'd have got $60 out of it, but he's done it through donations, so I got $100 pretty much. That's really kind of you, man. It's a shock to see that. I love it. Thank you. You deserve everything, Rocky. Thanks for giving us your all, says Sarah Restaino. Thank you so much. Thank you so much. Really, genuinely, you're funny, you're intelligent, you're choosing to be here with me. You could be doing anything with your time, yet you're here with me. Thank you so much. And again as well, Harriet, you said you put a super sticker through earlier on saying with £10. Thank you so much. Massively appreciated, everybody. Massively appreciated there. Right, thank you. That's really cool. Nice one. Yes, I squirted. The bottle's invisible. It was this thing. It went right at my eye, but it wasn't like sore or anything. It was just massive shock. It was like having somebody cry on you for 10 seconds worth of crying in 0.0001 second. The large Hydron Tears Collider. Sorry, I didn't get Rocky Outcrop. Didn't mean to disappoint everyone. What are you talking about? You didn't disappoint everybody. I don't know what you're talking about. You're probably not disappointed. Sorry, I didn't get it. I don't know what that means. I don't get what you're talking about either. Nice one. Shaky Beauty says, if you had the time and could look at them, helium, I'd appreciate it. Thanks. All right, Shake Your Booty. How's it going mining that stuff for you? What's the ticker for helium again? Helium. Come on. Hint. HNT. That was it. That was it. We don't want to look at it on that. We don't look at it. Right, just let me see. HNT USDT. Is this going to be one of these ones that I regret not having talked about ages ago and all the rest of it? Is it going to be? Hope not. I mean, I hope that I don't experience the regret as opposed to the fact that, I mean, I know that I didn't buy it ages ago and I was looking at getting a helium miner before this chart existed, as it happens. Interesting. Yeah. So anyway, here we have it. Now, is there anything particularly exciting about this? Who knows, right? I don't want to make anybody feel FOMO about anything. I think that there's these interesting ideas that can happen in the world, one of which is really long-range Wi-Fi stuff. It's so long-range, how can it be any good, says you, and you're right, it isn't any good. But radio signals that can spread across a city and then allow people to track items, for example, say you shoved a wee tracking device on your keyring, right? And then you lost your keys when you're out and about, and that you were able to go home and look on a network and see exactly where your keys are in a city because there's an RFID tag on it and there's radio waves being beamed across the entire city. Wouldn't that be cool and a good use of radio waves around our environment? And wouldn't it then be cool if you could set up a network of people who had little zones, little boxes that could interact with each other, cover across the distance of the map, that when people were using these devices and went into that area where they were providing coverage that person could then get some sort of payment for it? Wouldn't that be pretty cool? And that's what we're talking about over here. Now, are they the only guys that do this sort of thing? No, they're not. But they've obviously been performing fairly well in the charts, and what we can see here is that they've actually managed to take out their highs from May, which is pretty interesting. They actually did take that out, which is one of the rare ones that did it. Just bringing up Cardano, because we did talk about this again, just to show, one of the stronger performing coins up here not managing to take out that high that came in on the 16th of May on Cardano. So looking at helium and seeing that it just did it there in the last day is different, very good. As such, you see the 45-degree angle on the you can see here, if this is a chart, which this is a chart that I'm looking at, that I'm drawing this on, and you have got your y-axis and you've got your x-axis, and you can see that there's this line that goes up the middle of it right here at a 45-degree angle. That's the 200 simple moving average, and it looks decent. Now, we're also seeing here that the 50 simple is moving up at an angle, and you can see that is obviously a divergent angle where the two of them are moving not in parallel and getting further apart. So that's interesting. Overall, though, we just put in that massive high and then pulled back down the way. I mean, typically, what are we seeing in this chart is that there's an enthusiastic run up, a big event where people kind of sell into the enthusiasm elsewhere, and the prices drop back down again. So we're going to have to try and be vigilant. Looking at this, from that low that we had over there up to that high that we had up there, when the prices did drop down, they went all the way down to the 618, and then all the way in at 886, up to the 618, down to the 886 again, and then on up. That was, of course, a massive drawdown in the entire cryptocurrency markets. Prior to that, what we were seeing was drawdowns from lows up to highs. Along the way, look, from that high to that low, you're talking like a significant move, 30%. You're talking from that high to that low, 30%. From this high to this low, 45%. Please excuse me, I'll just put the charts back on logarithmic. I've not had the charts on for logarithmic for a wee while. I've just operated on happily enough, not thinking about it, but there you have it, the logarithmic, so you can see that a bit easier. Now we've done this, we've done this over the last wee while. If we were to see a pullback, what would happen? And how would that measure out? Well, so far we're down at the 236, and it's like this is immediate in the same sense that over here up to the pullback so far immediately down to the 236, but then cracked on down lower than it. Over here, you know, from say for example this low to this high, pull back down, 236 down and up again. That was nice trend in action from that low there to this high up here. Cracked down to the 236, didn't take out the 382, didn't go down, that went on up again. Same sort of stories along the way. So the so here we're back down at the 236 again, and we've not taken it out quite yet. But can you guess where I would be thinking about managing my risk at on this one? And when I say it again here, I've said that phrase again, so I'm going to have to come up and continue on as we have been doing. I said I would be managing my risk. So the assumption is that you're already in on a trade, for example, and you'll be managing your risk in around about this sort of a zone, and then you'd be looking to see if you can get up here into the higher high areas. Immediately, every single one of these, forget to get a 1.5 to, you know, the 1.5 to 1, you're looking up towards those areas. That's just coming down here and saying if we take out our previous wick of the previous 24 hours, that's all that really is, the low of yesterday. If we were to go down the way, we'd be looking for a movement further on down towards that 16 area. Then of course, looking at this percentage wise basis, the gap, the distance between the 236 and the 382 is a whopping 12%, which is why you're able to say, look, I would stop out fairly close to that because I don't want to experience that movement down the way there. So we're moving up, and you know, incidentally, if we did drop down, I'd be looking to 13 or indeed to 11, where you've got the 786, you've got the 618. Would the 50% area be enough for us? Would it be enough for us necessarily? How about we bring back in our friend, the Ichimoku cloud that we were talking about yesterday. In fact, let's stick on not the VWAP, get off the screen there, not the VPVRs there. Let's just point out a couple of things on the VPVR real quick since we're here. The drop down happens here because this is, you know, where we've experienced all-time highs, and this is a wick and this is a wick, so there's no action inside the VPVR on the right, but we do see that it kicks back in again here at the 236 just a little bit, but then there's a node there on the VPVR, and look at that, the biggest node. Where is it coming in at? Look, where is it coming in at? Comes up here and it peaks in it here. It's coming out here, it peaks in it here, right? Look at the VPVR. I know it's hard to see. Here it is filling up the entire screen, and then it resets because it has to calculate. I'll just do that again. It'll reset as it calculates it. But you see it filling up the screen. I'll do it one last time. Here are the key points to look to. There's the 618. There's the 236. There's the 382, etc. along the way. And then this is the drop off down the way after it. Now, right? Watch. See it? See, there's the node right there. See the nodes? So this is showing you that the risk to you in this zone is simply not worth it. The risk in this zone is simply not worth it. The pivots on this is so identifiable. The numbers on them are looking at around about $18, for instance. Then you'd be looking to try and get in at about 16.66. Then you'd be saying, I'm not actually confident of catching the knife in here at 14.37. However, this is the last inflection point, and this was previously resistance, which became support. So this is what, you know, like that's maybe something you'd look to, but oh my goodness, there's a magnet down here at these levels where the VPVR is in terms of going back in and retesting that zone. So I'd look out for that. Right now, we're doing okay, and actually we could continue on up the way. And I'm going to assess. Spent too long on this, actually, to be honest with you, but I guess shake your booty. Part of the reason why I'm doing this is because, you know what, I like that you're putting on music for people to listen to this morning in the chat. You know, I think that's cool. I like that community aspect of what you're doing, and I like the way that you're talking about a cryptocurrency that you yourself are interested in, that you're using it for more than just simply trading, and I think that's quite interesting. And I invite anybody to, you know, be friendly and hopefully then entice you into having a conversation with you about that if they're interested in it. So that's why I'm doing this in this longer form way. Looking again here just to revisit where we were last time. We came down when we came up and then pushed down. We came down, and where did we go to? Close enough that 382 before kicking on again. If we do drop down, I'll be looking to the 382. That number isn't about 1666. I don't like the idea of like trying to aim for a 50% Fibonacci retracement on this one. If it was going past the 382, I'd probably wait, given the sheer massive percentage movements that happen between these zones. For example, the 382 down to the 50% is another 10%, 20% to go down to the 618. If you pushed on, it's another 30%. And like I said, during trending markets on this one, we've frequently seen 30% pullbacks. How many? Once, twice, 3 times, 4 times, etc. along the way towards these highs, and so far we haven't had that. So the range on this thing is that you see small term pullbacks which go down like the equivalent of sort of 10 to 20%, and then bigger ones that go down 30%, and then beyond that, then I will just cancel out my trades on it. So I hope that was a little bit diversionary and a little bit different. Jumping back over to GME just to see how we're getting on at this stage here. 158, we haven't done anything special. Did we ever actually come back up and test that 200 simple moving average on the... We didn't do it, In fact, here in the 1 minute time frame, just to be all like super like, short termism and about everything and all, we've got the potential for a this is a triangle here. We could break it, equilateral triangle. If we do go up, then that will take us in for a test of that 200 simple. That would be bringing us back up to 162, etc. And if we did break towards the downside, then we're looking down towards that 155 area. It's not going to be much of a surprise. It's like everything that we do in the between time. It's just adding detail to the story that we've identified because of the overall pivots in the market that we've been talking about for the last week. AMC over here, AMC, by the way, just for people who don't quite let it sink in, support and resistance is very important. 160, 165, 155, 150. These are the numbers, not pulled out of my ass numbers. That because they're round numbers, it's easy to say them on screen. No, those are the numbers, and that's what we're looking to. So while it's below 165, you're going to have to say, I see that it looks good. I am happy that it's here. I am proud of the price action. It's good. But the good thing about it is the fact that it's above 160. Not that it's close to 165, really. And when it gets above 165, the good thing will be that it's above 165. It's actually 166. And then if you're looking at one down the way, so like those are that's like, so there you have it. There you have it, right? AMC over here, big push up the way. Obviously, this is a 1 minute time frame. Big push up in this morning, coming in for that 38. Back down the way, popping in off of the 50% Fibonacci retracement point, jumping up to the 50-minute time frame and seeing that is, of course, a retest of the 50 simple moving average along this bumpy to bump road towards the top size so far. The big rejection candle there, is it going to be like one of two ways of looking at it? One, it's a big rejection candle in a sense, like a doji, and another one, it's just examples of how there's actually appetite in this area. Now, it was dumped into, you could say, and pushed back down, or of course, it could be a long upper shadow wick. If I were to stick on the all candle chart patterns crap on here, all patterns, is that all patterns? Is this one going to show me it? Yeah, you usually have long lower shadow. I know you can't read this, I'll read it to you. To indicate seller domination of the first part of a session, candlesticks will present with long lower shadows and short upper shadows, consequently lowering prices, right? And the same thing should really apply to that candle over there. It's just that the body isn't big enough for it to be making that assertion about itself, and that'd be a long upper shadow, and it'd be the same chat, that'd be driving it up there. Whereas we can also look at it and say that's clearly a rejection. I'm not a massive fan of candlestick pattern analysis myself, right? But these ones it's curious for discussion points. Right now, 36.66 is the edge in the market to buy it if you want to, forward to carry us moves up the way towards 39.40 where our next targets are. But overall, still, even on this time frame, we're just coming up here and not having put in a higher low. The satisfaction for us was in terms of closing out here yesterday up above. The ability for the prices to remain above 36.66 are extremely important for us right now, in terms of not going in for a higher low. But in a trend format, we came up there and we did well. Oh, by the way, D, man, I got distracted. I'm going to back over to to that, whatever the fuck that thing's called again, in a second. Sorry, excuse me again. By the way, again, I'm sorry about my language, specifically speaking to AB Lopez and anybody else who's got kids that watch along. Kimmy, for example, sorry if you're watching here, or later with Nick, for example, my language. By the way, don't speak like me. If you're a kid watching this, don't speak like me. I proactively sit here thinking, I don't think it's cool. I don't think it's cool. So, don't look at me doing it and think it's cool. It isn't, right? It just isn't. So anyway, same thing applies for like smoking and stuff like that, by the way. So anyway, right? So I mean it, kids. I mean it, kids. And I'm not talking to you like, if you are a kid watching along, by the way, in this moment, I'm not talking to you like a kid. I'm talking to you like I talk to anybody else. Just don't, just be aware of that. Right. So, so we pushed up here, and we're not in a mode where we've got divergence, having taken out that previous high. That previous high there itself actually preventing divergence at $37 in its radical movement up that then dumped back down. It actually prevented divergence showing up, and we've also stopped the divergence there, taking out the 50 simple. This is good. It's the hard work you need to do to convert around on a trend. What was that thing called again? ADMP, or is it ADMP? Yeah. So here we have. I must have had these up because I've drawn on them, or else this was the other day. Can't remember, so I'll just do it real quick for you, buddy, because hide the drawings though. What have we got here? This low. Remove those candlestick pattern things. They're annoying. Down to 200, up to here. Yep, we've played it up. We're at 99 again. All right, we're back up at 100 again already. Kind of. What's happened since we looked at this? Has anything happened? When were we looking at this? We were always there. We can't have moved much since then. Nothing's happened, right? Yeah, nothing's really happened. Oh, we've got a golden cross on the 1 minute time frame. How magical! I'm just looking at the oscillators, and it's really annoying because they're not spread out well, and I'm just looking to see if we've got signs of an end to what would do otherwise be potential downward price action on the really small term time frames, in awareness that this thing's got such low liquidity on it that painting these things on is easy. And when something's easy, you got to assume that somebody's doing it. Instead, I'd look towards things like in a move when the markets could be so easily manipulated, then why not look to the indicators which they might want, which would take them down there in terms of how they have to get there. So we've got this movement down the way here, which is overall showing us the lack of continued downward strength during that period of time here. Still working our way up to something that could actually be considered a reasonable time frame on a chart which is so liquid as this one. 2 hour time frame here, and I need to hide the drawings again. That's a low. Hidden bullish divergence is there. Hidden bullish divergence is there. Not so much in the RSI. There's a weird movement though, as you'd expect on this chart. Got that death cross above the 2 hour. 4 hour time frame, same sort of story with this cross here. Yeah, okay, so anyway, not massive amounts to be learned by looking at these things down below. I would point out then, though, that there is this potential for this to not really, the MACD, concerned with the distance between the distance between moving average of moving averages. An average, like you've got one moving average and another moving average, and you take the value from one off the other, so 26 and the 12 or 26, something like that, and you're left with a number, which is not an average, but it's a calculation based on those two, and then that'll give you a number, and that number will go up or down, which shows you how close these two lines are getting together. So if this is one moving average here, and the prices are moving up, then the difference between these two moving averages is shrinking, and that's just diminished here. So you can see that in terms of the movements that we've had, that they've not been super negative to get us down to here. While in the face of looking at the sort of overall bullish divergence on the whatever timeframes it was, the lower term timeframes on the accumulation distribution, to see like the details of how that actually got us down here, then you're looking at that bullish divergence. And then with this most recent low that came in, it was a big push down the way. Where's our volume though? I think if there was one thing that TradingView should focus their time on over the next 6 months, it would be improving their standard out-of-the-box volume indicator. It's not an indicator either. It's just what it is. Chart, I should say. Right, so that was that movement there. Yeah, no volume down in these bits, and then it came in a wee bit relatively on the accumulation distribution, giving you those numbers. But looking back the way, this has got to be very low. Yeah, it is very low compared to, I mean, those are real distribution numbers. Like up there with that movement down, that's real distribution. Over here, less so, historically less so, and it's just kind of pushing the price around at this point while we're at a pivot point. You're on the back of something that is about to be manipulated towards the top side, most likely. 25 past, and we have 27 minutes past, 27 minutes past, ladies and gentle folks. Right, how is it going on over there in GME land as I just make myself covering up a big chunk of the charts, kind of intimating to folk that we are getting on. So 159, so we're coming back up to 160. So what are your numbers, ladies and gents? 155, 160, 165. When we're below 160, we're looking to 160, but I feel that really the current targets are the 165 to 170 range. 170 being a number to be aware of, where we've also got a sort of upward sloping supply line there. If you were to look at this like a wedge, we're also seeing things like, it being just in or around about where the 50 simple is on the 4-hour time frame. Beyond that, if we do secure that, then we're looking from 170 plus to 186. But we're not looking to 186 till we're above 170. From here, though, from a broader perspective, you can say that the target that we're looking to, should we trend up the way, is 186. In the meantime, better buys are coming below 160, managing your risk at 155 to not expose yourself. Now, that's not what's actually happening with anybody trading, but that would be the TA, and that's how a trader would look at this right now. You can choose whichever discounts that you like in terms of, or whatever patience degree that you want, or whatever, with regards to your GME shares. Hopefully this is educating you, though, because what I want to do is empower you. What's the point in all of what we're doing here if you're not left empowered at the end of the day? AMC here, above 36.66, we're pretty content. You can see here in the 50-minute time frame that the 50 simple is ridden right the way up to where we have the 382, the 50% Fibonacci retracement point in here, that where the prices are right now, saying, hey, there's an edge here. Now, this edge could provide liquidity for a dump down the way, and if that were to happen, I'd be looking down to $35, right? So another buck off of here. It's not a massive percentage move, but you're talking about the handful of a few percent, and that would be the discount I'd be waiting for. I wouldn't be wanting to buy in on that. But if we were looking down and saying that, look, so long as the prices are above 33, pretty happy overall. I'd like to see our overall. This is actually it. Yeah, this is what we need. This is what we need to discuss. Well, we need to discuss, and then we can leave it. We drop down below 36.36, drop down below 36.32 in terms of where where that's coming in at exact number, but whatever, $36. Then we're looking down to $32 for our higher low. That's where the 236 is. That's where we're looking down to. In the meantime, it's interesting to see this numbers moving around, actually trading this in a way where it's like, not instead of it being like when the prices are at 70, saying we could go down to 37 and talking about massive stuff, for us to be just talking about how we can trade this in a way which makes sense within this region without breaking anything negative and still just kind of turning around. This is the work you need to do to get back to the bigger trend. This is the work you need to go through. This is what we're doing. This is the process. Understanding that, being aware of it, will certainly empower you in future when you come back around to looking at markets which could potentially be turning around, especially in degrees of what patience you might need out there in the world to actually do stuff like this. Here we have Rolls-Royce up here, $111, challenging that sort of 113, pivot point for me. The highs to in this entire period of time have been 112.80. Like I say, 113 is the pivot point for us. This is the work you need to do to get to maybe take advantage of a huge reversal pattern at the bottom of a massive pullback in markets. Here, having done the work you need to do, coming up towards these regions, massive big trade there in terms of risk to reward with that previous head and shoulders at the bottom there, the inverted head and shoulders. We're below this area, consolidating in it. This is the work you need to do. You'll know you've stopped trying to do the work on Royce here, Rolls-Royce, RR dot, if you want to chart it on the proper chart. If you're buying it in America, then obviously you're talking about whatever it is, RYC, where is it? RICEY. You're talking about it over here. and you're saying, and you're like, what's Rocky talking about? Well, this is the consolidation shite I'm talking about over here, but you see it's different. It's a different chart. I'd prefer doing the TA on the actual chart. You can see the lows that came in here at 121 on the 19th of July, and compare it over here to the Rolls Royce chart on the 19th of July. That's where those lows came in over there, but you can see that the low was lower than the previous low. So the 6th of October low, RYCEY, 6th of October low over here was down at what, 143, and then we went down to 122. RR dot here, which is obviously the original source, is where we had the share dilution happen. The share dilution happened, and then of course this is an adjusted chart, and that's why we see that the previous low in October was significantly lower than where we came recently. But you're seeing in terms of RYCE, one of these extremely unusual opportunities where due to a share dilution you've got lower lows, and you've done that no, you've done it with bullish divergence. I mean, you have. It's just you have to look at it in something like the weekly time frame, right? So there we have it. The weekly time frame showing us sorry, by the way, what just happened there now is I was looking at this on whatever it was, like the 4-hour time frame or whatever it was, and I was looking back at these lows, and I was looking at the overall movement of the RSI, and I was saying to myself that despite the fact that this came very, very low and came down and pretty much equaled or was actually slightly bullish compared to that low over there, that if we go up to a larger time frame, that what you're going to see is this movement up the way. And it seemed obvious to me. Now, I can't really properly articulate to you right here, right now, why that was obvious to me, other than to say that I'm experienced at doing this job. But I knew that looking down the way there, and that this was going to look up the way in comparing to those 2 points. Now, it's just something that you're going to notice. So anyway, there's a big long-term downward movement, and I'm looking to see this bullish divergence at these lows come in here and push us up the way, while we've had slightly anomalous price action given the share dilution. And that's something that I find extremely interesting when I zoom in on the charts, having considered and announced already that 113 is a pivot point for us in the near-term future. It might only take us as high as 136. I'm not saying that the world's going to change, but I'm saying that right in here as we're consolidating, it's worth bearing in mind. And we have been at it for a couple of weeks already, giving us a good chance to pull back here and not put in any sort of divergences that are too bad. Of course, there is hidden bearish divergence between those two highs, but we've not confirmed it as a local low. The work stops in terms of the positivity below 106. I suppose I should be a bit more generous and say below 103, but we're looking here and saying that we could easily push up the way, having boiled things off a little bit with the consolidation here. Mwah, beautiful. Oh, and F to the mother effing yes, at last. 238% surprise on its earnings, as reported 176, standardized 491, the estimate was minus 127. There you go, fundamentals on things, they don't always count for anything at all, but we knew this about Rolls-Royce for a very, very long time. Looking back here to these sorts of earnings, you're seeing that the estimate was 5, as reported 6. Back over here, you're seeing the estimate was 4, as reported 4. Yeah, all these things like then back then, standardized 29, 37. There's big differences, but then you go back to whenever, like whatever, this is it. We've just turned things around. COVID stuff, sorry, damn, I shouldn't have said that word. If anybody wonders what word it is I'm talking about, then, oh wow, then that's what that's all about, by the way. I say I can't say that word. The word that cannot be spoken was that word I just said there now. So anyway, things have changed quite a bit here. That's good. At the point here when you're seeing that big downward movement, this of course having been brought into February 20, what's going on until February 20 is the prices are operating at sort of $300 per share area. So we're looking to see if we can get a couple $100. This is a blue chip. I'm not looking for like meme stock, so to speak, volatility on this thing. What I'm looking for is blue chip. This is something that you could have and you would say is a reliable stock over a long period of time. It's a blue chip stock. That's what we're looking at on this one, where you can maybe spend things like going from 2009 until 2013 in an upward trend overall without having to think about things for a period of 4 or 5 years or whatever. Would be nice if we could do from 2021 until 2024 a nice upward trend on a stock that you never have to think about, that just simply adds value to your portfolio, where eventually you relinquish it for a wee bit and you think, well, that was worthwhile, didn't cause me any stress, and it was a pretty big move on a blue chip company which is built into the very defense fabric of the United Kingdom and is impossible to short to zero, because it would be an absolute national security risk. If that thing went to zero, you've got bigger problems. You're having your front door kicked in and everybody around you is being like murdered in a war. that's the sort of level of company that we're talking about here, right? Sweet. 37 minutes past. Going up. I know I've had my screen blocking up some of the chart for a while there, but that was just to give everybody the impression that we are indeed wrapping up the show. I want to give an extra big shout out when we do these chit chats here to D Harker for having been an extremely gracious person. Check your green screen images, says Sarah Raisano. Yeah, I'm sorry. Thank you much for the donation there. I'm aware of the fact that I've been blocking up the screen for a while. I'm just trying to bring people mentally around to the idea that, oh fuck, it's massive. Oh, it's way massive. Oh yeah. Oh, Sarah, sorry about that. Thanks for that. Yeah, well, anyway, you didn't miss out on anything. I'll just show you again. Thanks, Sarah. Right, here's the RISI chart. What we were talking about here, sorry for blocking this up, by the way, is over there you'll see a low. This is the low on the 20th of July. Over there you'll see a low, that was February. Over here you'll see a low, and that was October 2020. Compare that to the RR chart, and you can see over there that we got that low in July. That was in at around about 86. Over here was that low in October, significantly lower, went all the way down to 35. Just compare this again to RISI. Here's the October low coming in here, and is at around about 139. The July low in here at 122. Slightly anomalous. The reason for this is because, of course, that these are representative shares. They're not real Rolls-Royce shares. They're synthetic shares. What they do is they represent, however, a real share. It's like a contract for a share or something like that. So shares have been deposited into J.P. Morgan's American Depository Fund as a foreign shared way of buying foreign shares within the domestic OTC market, and then it's got this anomalous result because of the dilution that happened. Anyway, as you can see, there's our earnings on this one. It's coming in here slightly different numbers as well. Surprised by 13. Estimate was -5. As reported, it was 7. RR dot, and you'll see that in terms of the actual sort of earnings and the actual, it's like as reported 176, surprise 3, you know, etc. Estimate 127, -127. So this is where you're getting your actual data from. Seeing the anomalous price action there, the long-term downward trend. I looked at this from the point of view of the weekly, and I was saying that over here on, well, I was looking at it on the 4-hour time frame and saying that in terms of the RISI chart, and I was looking at these lows over here. So you can see down there on the RSI that, you can see on here in the RSI that there's this kind of mess here between the things that I'm trying to say. Are we seeing divergences in this downward move? I know, and that's not very good, but we know two things at this point: that we're looking at a smaller term time frame for a bigger term time frame move is not the most sensible way to approach that. And another things that we can see is that we actually did have lows in here that came down. We were actually pushed right down as low as they were previously, and that we didn't, you know, that there was this movement in between, which looks like, if you were to stack it up, let's just go to the 24-hour time frame in between, and you're starting to see indeed definitely the bullish divergence is right there. So I bring out the line, draw it down, pop that in and show us our lows. There's the lows that are getting lower. Here's the lows that are getting higher overall, but then there's this little anomalous point in view just there, jumping up to the weekly time frame and showing that this thing just slants all the way up. You know, at this point here in the RSI, you can see that there's no debate at any point in this thing, and that really what we're looking at is a long-term downward movement, and then suddenly, you know, what's a weekly chart that takes such a long time for things to play out? You're talking like years for a year for this chart to play out. Looks like the type of thing that we look at on a small term time frame on anything else. I'm making this type of assertion at this point here while we're in at this area of support and resistance at the 50% Fibonacci retracement point, looking up, you know, and saying that we could potentially go higher is really nice in terms of consolidating for this blue chip company here, consolidating in this period of time, right at an area of where I would consider to be a pivot in the market right here at 113. But I know that there's a zone, and I talk about this every time I talk about this on the channel. I talk about this and I draw a big wavy line between those two green lines, and that is a zone, okay, and it extends and it goes up as high as 130s or so. So you might just see the profit taking coming in at 133 and us suffering for a while longer. But It's nice to see that happening, and you know that things have changed and the prices dropped below 106. Okay, so and that's where that 236 Fibonacci is. I hope that explains a good deal of what I covered up with the chart. Thank you, by the way, for that, Sarah. Check your green screen images. Thank you for that. I really do appreciate it. I'm shorting Ricey because America, says Daniel Listash. Totally. Yeah, man, the greatest military in the world. Short Ricey, man. Ricey. Jeez. Now, the thing about it is that they also make all of the planes' engines. You know, all the planes that are up there at the minute, all of their engines, they're made by Rolls-Royce. And they also maintain those engines. And you know what aren't being used at the minute very much? Plane engines. But you know what's going to be really popular again soon? Plane engines. In the meantime, they can't possibly go bust because they're contracted to deliver the engines for the engine for the final remaining most expensive submarine in the world, bought by the UK government as part of its long-term national defence strategy. And they have to give them a fucking engine. So it's not likely that they're going to go bust in the meantime. When it's, anyway. Woo! So, thank you so much to everybody for being a part here. Let me just read these super chats. I've missed out on a couple here as well as I'm looking back. Andy A. Come and listen to my story about an ape named Fred A. Poor ape, mountaineer, barely kept his ape troop fed. And then one day he was shooting at some food and up through the ground came a bubbling TA. Hey! Scottish TA, that is. Banana Gold, 10 days tea. If it ain't Scottish, it's crap. Andy A, thank you so much for this. These donations are a good laugh. Well, the first thing you know of Ape Fred's a millionaire. The kinfolk said, Ape Fred, move away from there. Said, Damoon is the place you ought to be. So they loaded up the rocket and they moved to Lunar Land. Yes, Lunar Station number 1. Let's build it, baby. We'll make the walls 100% tendy. Hey, thank you so much for that. Daniel Assange jumping in here as well. He's saying, don't care about your fancy book words, American spirit. Make anything go bust. Yeah, totally. I love America, and I love America doesn't get enough credit. America does not get enough credit for being a self-aware country, right? Does not get enough credit for it. British people try to give themselves credit for it by being all like, yeah, check it out. We were sexually repressed during the Victorian period, and compared to other people around the world, we're a bit loopy and stuff like that. Americans, at least, they're self-aware. They embrace it. They talk about things like America, and they got guys that are doing that. You got that embracing of that thing. You don't ever see anybody going like, yeah, I'm a Brit. Ain't nobody in the UK self-aware enough to be all like, oh yeah, Britannia. No, it's not. Not really. I mean, I wouldn't do it because I don't like Britain. That's my politics. People know this. It's not hidden. I think Britain's a load of shite, and I want Scotland to be independent. And I do make self-aware jokes about Scottish stuff all the time. But I wouldn't do it about British stuff, and I've never heard anybody else do it either, to be perfectly honest. Not really. Why do I feel like me hitting on Rocky Outcrop is the way? Good question. Put your everybody should feel like that. Everybody should feel like that. That's just what everybody should feel like. Anyone else hear that banjo playing in the background? Was that what was going on? I wasn't listening. By the way, shout out to yourself, Veronica, for having been such a So thank you so much, right? See me not being in contact with you recently or whatever to catch up, because I know it's not a problem and you're going to be like, hey, it's cool, Rocky. It's because I'm going to do that this weekend. It's because I'm busy and tired and everything else, and I'm just thinking so grateful. And then I read your messages in the chat, and I think great, everybody trying to help, really fantastic, really love it. Everybody does stuff in different ways. You're not part of the mod team, so you're not, we're not all telling each other how great you are and all that all the time. So they might not even know about you. And there's me giving you a shout out just to make sure that that's heard. And if as well, by the way, shout out to the mod team. That includes Apple Blossom, FU Money, all you good guys, D Harker, that's recently been made one, Katie Babes, who's in the chat there as well, and of course as well Christy who's taking a wee bit of time at the minute for personal stuff and that's totally fine, and a big shout out to you, big shout out to you, because when you come back and you've got that time again to be spending it with us, Big open arms will be received to give you big smothering hugs. Good stuff, right? So big shout out to all yous out there. Plane engines made from 100% pure rolls. I know what you did there, man. I know what you did there. And that's totally right. That's totally right. 100% agreed. I can't wait to go see him next year. Everybody else watching along at the minute is like, what the fuck's he on about? Cannot wait to go see him next year. Absolutely, totally dying to go and see him next year. Fantastic stuff. Cheers, man. That was a funny little in-joke there. Don't talk to me. Don't talk to me. Right, sound. So back over to the big screen where I show the... What's going on there? That's weird, isn't it? That's weird, isn't it? Is it going to move? No, it's not going to move. So back over to this one. That's what it's like. That's the natural bokeh that comes off my camera lens. Pretty amazing, huh? I can make a fakey bokeh by using zoom. This is what I'm using to get my fake green screen. But that's the real bokeh. Pretty good. It'd be cool if I didn't have a chair that was behind me though, right? So what I want is this sort of a thing. That's what I want. That's the natural look that I want. So I'm going to get a new chair soon that doesn't have that. Or else I'll get a chair that does have that because I won't know, because I'll be buying it online and I'll turn up at the door and I'll be like, oh, right, it has that. Vic Vince, big shout out to you, Rocky Outcrop, for being a cool guy who just rocks. Check that out. By the way, Vic Vince, being a big shout out to you. You were in the Discord saying that you've learned stuff. And I'm thinking, brilliant, because here's a guy who actually trades, you know? Who traded before he ever found me. He was trading. He's in there talking about how he's learning stuff and that, and he's helping other people learn too. Fantastic, much appreciated, Vic. You are appreciated. By the way, I mean, I could be reading out names here all the time. Bad Mama Jama right there. Wow, what a guy. See the GME and the AMC in there. What a guy, by the way, Bad Mama Jama. I love you, Justin, man. You're a great guy. Banana Fridge, you know, could be reading out your name right now. Could be. Wolfric Doomslayer. Could be. I know yous all. I know yous all, and I love yous very much, every single last one of you. There's FU money in there as well. Everybody's here. I mean, it's great. Thank you very much. Nova Scotian Unicorn, Worth His Life, KT of Charka. By the way, this constitutes a subtle reverse roll call that I'm doing right now because we're wrapping up the show. Simone Cooper. Who's that, eh? Michael Jordan. Hey, Michael Jordan. Can he fly? I don't know. I think he can. We should do some science on it. I think he can fly. What did you say earlier on Michael Jordan? I have a half taken apart CPU with a USB cable attached to a screen, less light, bright, and I tell people I mine Bitcoin. Oh, well, maybe you do. You tell people you mine Bitcoin. What's the first thing you know? Oh, wait, no, that was that chat from earlier on. We saw that. Yeah, shout out to Shake Your Booty. Shout outs to Andy A. Thanks so much, pal. You'll be getting a shout out again in a second here when I run the credits. Kim Robbins, big-hearted person you are, Kim. Love you. Queen Bee. What a lethal gladiator that she is. Love Queen Bee. She's crazy, right? Queen Bee. She's crazy. She's crazy. She's crazy. I'm crazy. And I'm like, high five, Queen Bee. Let's LFG. She's gonna sit in the rocket seat beside me. I won't let her take control of the wheel because she will crash. But she's crazy. I love her, and she'll be my passenger on my co-pilot. Darren Thompson, good to see you. R.A. Woodman, thanks so much for tuning in today. That's cool that people were asking about stuff and chatting to each other in there. Dan Ernst, always a good guy as well. What have we got? That Dan Ernst, a couple of Dans in here. John G, Shifting Cat Eaters. Sarah Restaino, good. Oh, Sarah Restaino, by the way, you can search for that name on YouTube and you'll find her channel. Let's just do this real quick. Gonna embarrass you, Sarah. No, I'll not use that tab because it wants me to save it. Gonna embarrass you, but you're not embarrassed because you wouldn't have made a YouTube channel if you're embarrassed about stuff like that. Sarah Restaino. Sarah Restaino. It's not Sarah E. Restaino, by the way. Or is it? Are you both of these Sarahs? Are you both of these Sarahs? Anyway, there's this Sarah, right? No, I'm not going to play it. It'll demonetize me, probably. I'll play title tracker of her LP. Autumn Holiday, Sarah said, I might get done for that as well. Is that even you? I'm wondering. And then there's this one. Anyway, this is the channel that I'm actually looking for. As you can tell, it's the one I'm subscribed to. And she does funny stuff. Here's the basic makeup one that I watched earlier on. Oh, damn, you can't hear it. You probably can't hear it right now. Look, it's satire and it's funny, right? She's making jokes. She's making jokes. It's funny. It's very funny. It's very funny. So, like, you've got jokes. What would be a visual joke? Here's a visual joke. Right, sound. Good. Good stuff. I don't know if you could hear any of that. My speaker's not on, so I'm assuming you can't. And I'm trying to roll the credits. And there's the credits there. Hopefully. And we'll go back to this one. Yes! Need to move me in the middle so I can read them. D. Harker, massively appreciated. You're a really great guy. All right? Really do appreciate that. Look at all that list of names as well. Dude, that looks like my kind of shite. Gonna go sub, Sarah. Hey, Ashley. Excellent. Nice one. Kitty Babes, wait. No, I'm not going to wait. I'm going to do the credits. You can't hold me back here. Thanks for watching. Then to everybody, to the donor, D. Harker. He gave me $100, everybody, right? I massively appreciate that. It's amazing. Thank you so much, D. It's really, really appreciated. Gaston, the Dead Money All-Stars, Kim Robbins, Bulldog Buchanan, Katie Babes, Amber, Stephen Kimbler, Daniel Assange, Generation Ape, That Jiu-Jitsu Guy, D. Harker, H. Jones, Sarah Ristaino, John G, Shake Your Booty, and Andy A. All apparently did super chats today as well. Am I mad? Did I read all of them out? Daniel Assange, day one kindergarten. My Irish grandmother told me not to trust British people. If I had a chance meeting one at age 5 in Boston, her politics were yours, I think, but I'd up for American fire. Aha. Plane engines made from 100% pure Rolls Royce. That is a Stuart Lee joke that he's making there, I believe, and it's really funny. Good one, D. Harker. Don't care about your fancy book words, says Daniel earlier on. Andy A, Daniel Assange, Sarah Steino, Shake Your Booty, John G, thanks for that. D. Harker, excellent, very much appreciated. H. Jones, thanks for that again there. What, but I'm looking up here and I think there was a name I didn't read out for sure on that there. Stephen Kimbler, 2 hours ago, donated $9.99. Thank you, Stephen, man, that's awesome. 2 hours, we got $5 from Katie Babes. Thank you so much for that. Kim Robbins, $9.99. Bulldog Buchanan, there we go, $4.99 through Super Chat. Thanks, man. Did I miss out any other names? Amber as well. I didn't read you out earlier. Donated $5. Best content on the tube. You're rocking it. Thank you so much. That's amazing. There was another one I think I missed. Bulldog Buchanan, $4.99. Yeah, I got that one. So, because I love you and you're an amazing person, from Kim Hart. Thanks for all your TA knowledge 2 hours ago. Really sorry I missed these. I'm super grateful. Thank you so much. Thank you. Woo, Rocky, tell me that's a banana in your hand. Yeah, that was back when Apple was laughing about me wanting to play with it more than eat it. Would you take off enough of the table at one half? So I got the rest of them, I think there. Amber, thank you so much. And thank you. Generation Ape, where's your one? Don't give up. Oh, that was that. Yeah, great. Ooh la 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 la, I love you, baby. Ooh la 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 la. Hit like on your way out the door, everybody. Really do appreciate it. If you want to join the Patreon and all that, you just go along to my... if you want to join the Discord, you go along to the Patreon, and you do that, and the Discord is where I will be from henceforth. Catch y'all later, y'all.